will now join them, and the Patriots might now try to land tight end O.J. Howard in a trade with the Bucs. The Red Sox had to be worried after baseball came down hard on the Astros for what they did, stealing signs on their way to winning the 2017 World Series. The Sox were accused of doing it while they won the series the next year, but the punishments came in, and they were basically slap on the wrist, the forfeiture of a second-round draft pick. The MLB investigation concluded that one guy, replay system operator J.T. Watkins, was really the only one involved, and that manager Alex Cora was not. Cora lost his job managing in Boston for what he did the previous year as a coach in Houston. Watkins has been suspended. The NHL is said to have abandoned the idea of having all playoff games in one city. They were looking at some small markets. Commissioner Gary Bettman says now that 4 cities could be involved and that the Stanley Cup playoffs may take place this summer. John Stashauer, Bloomberg Sports. Nathan.
Thank you, John. It is 6:37 on Wall Street.
The following commentary is from Bloomberg Opinion.
Subscribing to Netflix is no longer a choice. I'm Tara LaChapelle, a columnist for Bloomberg Opinion. Netflix's business model was only supposed to work unless and until a recession hit, or so said conventional wisdom. But that turned out to be wrong. We're now in a stay-at-home recession, and Netflix, along with Zoom, Instagram, TikTok, and Amazon, have defined the experience. Nearly 16 million users signed up for Netflix in the first quarter. It's a remarkable pace of growth that won't last, as even Netflix admits. But more important, behind that number is a consumer that may be more convinced than ever that Netflix is a necessity. That can't yet be said for other streaming video services. According to research by Moffett-Nathanson, about 80% of people using Amazon Prime Video, Hulu, Disney Plus, or Apple TV Plus still also use Netflix. As it stands today, Netflix still seems to offer the most bang for your buck, and that makes it a fixture for many households. I'm Tara LaChapelle. For more Bloomberg Opinion, please go to Bloomberg.com/opinion or OPIN Go on the Bloomberg terminal.
This has been Bloomberg Opinion.
Hear Bloomberg Opinion commentaries every weekday at this time. Terminal customers can read more at OPIN Go. It's just before 6:39 on Wall Street. Time for the Bloomberg Green Report. Here's Bob Moon.
Knowledge is power, or so the saying goes. Now, life in lockdown is changing what we know about global demand for power. A Bloomberg analysis of power market data shows the dramatic changes in human behavior. People are getting up late, slacking off in the afternoons, and staying up till midnight. In New York, electricity use at 8 a.m. has fallen as much as 18%. With no commute to the office, people can sleep longer. In Germany, it's clear coffee machines aren't going on until between 8 and 9 a.m. The experience of one financial analyst in London explains it. He says he's not getting up until about a half hour before he needs to start work. In the UK, charts show a deeper dip in electricity use in the afternoons, perhaps as people head out to get some air. And we're going to bed later, too, even children. Demand doesn't start to drop off until 10 p.m. to 12 a.m., at least an hour later than before. Says an energy expert in Britain, it's as though we're living through a month of Sundays. That's the Bloomberg Green Business Report. I'm Bob Moon.
Thanks, Bob. As the coronavirus outbreak has slaughterhouses shutting down, the clock could be ticking for the U.S. to avoid a shortage of meat. Here with the story is Bloomberg's Charlie Pellet.
Tyson Foods is idling its largest pork plant, making it at least the 6th major American meat facility to shutter in the last few weeks. Currently, about 15% of hog slaughtering capacity is completely offline. There are also additional slowdowns at pork, beef, and poultry companies across the nation. Meat prices are starting to surge on the disruptions, but with slaughterhouses closing, farmers don't have a market for their animals, and that's causing hog futures to drop, potentially creating a situation where pigs get euthanized and buried as supplies back up. Charlie Pellet, Bloomberg Daybreak.
And Charlie, the top aluminum producer in the U.S. is cutting costs and output. Alcoa will suspend production at one of its plants, cut capital expenditures, and defer pension contributions. Aluminum has been among the worst performing commodities during the coronavirus pandemic. Futures moving lower now. This is Bloomberg.
Not completing high school is more of a social thing than it was an academic thing. I came out in the 11th grade. Nobody was embracing you. The kids were cruel. It was very difficult to be gay. Even though all these years have passed, I still had that longing to have my diploma. The hard part was determining that I was going to do it, but I definitely didn't do it alone.
At age 30, with the help of her mentor, Carissa finished her high school diploma.
I have a mentor, Maria. She convinced me to continue my education and to finish what I started to get my diploma. Just never judges. She's a true role model. If you're even considering getting your high school diploma, go get it. You can do it.
No one gets a diploma alone. If you're thinking of finishing your high school diploma, you have help. Find free adult education classes near you at finishyourdiploma.org. That's finishyourdiploma.org. Brought to you by the Dollar General Literacy Foundation and the Ad Council.
Asset managers who seize change to launch new strategies, add distribution channels, or exploit new technology to re-engineer the investor experience are often rewarded. However, in an industry paralyzed with complexity, few act with agility or decisively. Few run their business strategically. Yet, the most competitive managers in the market know, with the right partner and a flexible operating platform, you can. Go boldly toward change with SEI Investment Manager Services.
Determination and operational strength are both essential factors for growth in asset management. I'm Steve Meyer, President, Head of SEI's Investment Manager Services Division. We know that disruptive forces create opportunities around the world. If you see potential in change, our industry specialists will maximize SEI's integrated platform of data and risk management, global investment operations, compliance support, and investor services to position your asset management business for success. Come grow with us.
With SEI Investment Manager Services, you lead the charge in a competitive marketplace. Learn more at SEIC.com/seize change.
This is a Bloomberg Pursuits look at...
Okay, people, I've got the daily checklist. Who today has ignored a call on purpose? Tick. Talked yourself out of a workout? Tick. Spent far too long scrolling on your phone? Tick. Here's another for your list. BritBox. Streaming the BBC, ITV, Channel 5, and now Channel 4. All in one place and ad-free. So add BritBox to your list and get a 30-day free trial of the biggest box of British box sets. Search BritBox free trial. Tick. Biggest compared to other SVOD providers. Auto renews at $5.99 a month unless cancelled. T's and C's apply.
This is a message from the government. Coronavirus is a national emergency. Life-threatening for people of all ages everywhere in the UK. To help save lives, stay home. Only go outside for food, health reasons, daily exercise, or to work. But only if you cannot work from home. Stay home. Anyone can get it, and anyone can spread it. Coronavirus. Stay home, protect the NHS, save lives.
We've never been further apart, yet somehow never closer. At Barclays, we think it's important to celebrate the people making a difference and help support those affected during these extraordinary times. That's why we're supporting the Big Night In appeal. We've kickstarted our donation with £1 million, and if you're a Barclays customer, we'll match your donation pound for pound, up to a total of another £1 million. So if you can, please join Barclays and donate at barclays.co.uk. All donations will be split between the registered charities.
The NHL is always on the ice with these awesome hockey podcasts on TuneIn. Get your goal with the Spittin' Chicklets podcast.
Brian Yandel, Keith Yandel, thanks for coming on. What's going on?
Nothing much. Glad to be here. You guys got some nice digs here.
We heard you took Southwest 2-stop flight to get out here.
Yeah, well, just...
Carve up the ice with NHL at the rink.
The other day I wrote a story. Artemi Panarin, Semyon Varlamov, Sergei Bobrovsky, they all helped arrange for the purchase of N95 masks to benefit hospitals in their respective markets. This is another one of those positive stories you're seeing.
Or create your own power play with the Locked On NHL.
All these teams invested future assets to take a run at the Stanley Cup right now. Like, all of those teams would have a real serious gripe, like trading these multiple first-round picks to make a run at a cup. You're right.
Discover these and more NHL podcasts right here on TuneIn.
Network of news and financial information 24 hours a day. Powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg Radio. Now, a global news update.
Special report, coronavirus update. President Trump says he disagreed strongly with Georgia Governor Kemp's decision to reopen some non-essential businesses shuttered to contain coronavirus. Also from that White House briefing, a warning to states where businesses are reopening from Dr. Anthony Fauci.
The one way not to reopen the economy is to have a rebound that we can't take care of. So please, again, let me just close by pleading with the American public in general and those who are responsible leaders to carefully consider how we get back to normal.
The Department of Veterans Affairs is struggling with shortages of workers at its healthcare facilities as it cares for veterans infected with coronavirus. The AP reports about 1,900 VA healthcare workers have become sick with coronavirus. 20 have died. 3,600 VA healthcare workers are quarantined. I'm John Trout.
Tom Keene and Jonathan Farrell.
Is that good for American finance?
What is happening with the headcount?
Right, where it counts. Bloomberg Surveillance, weekday mornings at 7 Eastern on Bloomberg Radio. Bloomberg, the world is listening. Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and on Quick Take by Bloomberg. This is a Bloomberg Business Flash.
And I'm Karen Moscow. U.S. stock index futures are little changed to lower now as investors weigh the latest signs of the coronavirus's impact on the global economy and a slew of corporate earnings. We check the markets every 15 minutes throughout the trading day on Bloomberg. Right now, S&P futures are down about a point. Dow futures down 40. NASDAQ futures down 14. The DAX in Germany's down 0.2%. 10-year Treasury down 2/30 seconds. Yield 0.62%. The yield on the 2-year 0.21%. NYMEX crude oil is up 11.1%, up $1.53 at $15.31 a barrel. COMEX gold is up 0.6% or $11.10 at $17.49 an ounce. The euro 1.0765 against the dollar. British pound 1.2346, and the yen is at 107.60. And Eli Lilly saying first quarter revenue was boosted by about $250 million due to buying patterns and patient prescription trends resulting from COVID-19. That's a Bloomberg Business Flash. Now here's Michael Barr with more on what's going on around the world. Michael.
Karen, President Trump says he told Georgia's governor that he disagreed strongly with his decision to reopen some non-essential businesses that had been shuttered to contain the coronavirus. Speaking at a White House briefing, President Trump said he told Governor Brian Kemp that he had misgivings over the governor's plan, but would not stand in his way. Two Fox News polls show Joe Biden has significant leads over President Trump in Michigan and Pennsylvania. The polls both found the presumptive Democratic nominee leading President Trump by 8 points in the swing states. The president narrowly won those states in 2016. There will be no stage, no podium, and no hug from the commissioner, but there will be living room celebrations. The NFL draft goes virtual tonight. The format will feature NFL Commissioner Roger Goodell announcing the first round picks from his own basement. Global news 24 hours a day on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Michael Barr. This is Bloomberg, Nathan.
All right, Michael, thank you. We are live from the Bloomberg Interactive Brokers studios. We're at 6:49 on Wall Street. Time now to check what's going on in D.C. Some of the top stories in the nation's capital include President Trump signing that executive order he said he'd put out to suspend green cards for immigrants during the coronavirus outbreak. The House voting today on another nearly $500 billion in coronavirus stimulus funding, and the president and vice president signaling a readiness to reopen by resuming their travel schedules. Also making news, the president at odds with Georgia's governor saying he's opening his state too soon. For more, we're joined by Wendy Schiller, chair of political science at Brown University. It's got a lot of people's attention last night, Wendy, when the president aired his misgivings about Georgia Governor Brian Kemp making moves to reopen as soon as tomorrow, particularly when we had those tweets from the president just a few days ago calling for Democratic governors to liberate their states. What do you think is at play here?
Well, it makes you think that his advisors have told him that this is a longer haul than he wants it to be. I think that anybody wants it to be, and that there are significant risks to opening up too soon, and that you could have another surge, or you could have another wave, or the wave could just, this could just extend and extend and extend. And remember, November 2020 is increasingly closer to our timeline. So I think this is, you got to figure that's what's going on there. And when you look around the country, the risks both to President Trump and also the Republican Party, there are a lot of states that are shifting a little bit. Georgia's one of them. There's a hotly contested Senate race. That's a fighting within the Republican Party in the Georgia Senate race. There's Arizona, there's Minnesota, North Carolina. As these states try to grapple with opening up, the consequences are obviously life and death, but they're also political, and they're going to affect the president as well as the Republican Party.
We also have some polling in a couple of key battleground states, Michigan and Pennsylvania, showing Joe Biden with pretty sizable leads there. Where do you see the landscape, particularly in the battlegrounds, as we look ahead to November?
Well, I think the problem for all political watchers is that you look at, Pennsylvania, you look at Michigan, and you remember 2016, and Hillary Clinton was 8 or 9 points steadily ahead of Donald Trump in Michigan, and about anywhere from 5 to 6 points ahead in Pennsylvania. She lost both states, Michigan by a hair, but Pennsylvania by 60,000 plus votes. So I don't think Trump worries about those polls at all right now. I think it's really the economic impact. How quickly does the economy come back, or how quickly do people envision the economy comes back? Because it's not just that it has to come back right away before November. They have to have belief that it will come back and that his stewardship helped it come back. Right now, people don't really perceive that to be happening. But, in that case, he's got the summer to fix it, which is why another rebound of the virus will really damage his electoral prospects because it will be that much closer to November.
And the president is saying now that he is doubtful that the virus could revive in the fall. Is he looking ahead to the election there? Is this another aspirational goal that could end up fizzling like the last aspirational goal did of an Easter opening?
Well, there's two things there, right? Of course, every single day he's thinking about re-election, and so are the Republicans are thinking about the 23 seats that they're defending in the Senate. Every single minute of every single day, I think they're thinking about that. But what's important is that if people don't believe that we're beyond the most dangerous point, they won't get out the door. They won't actually go back to the restaurants. George is talking about opening all sorts of public venues. People just won't go. So you can open them, but nobody shows up, and that really hurts the economy. So I think the president's trying to walk this fine line was saying, let's be careful. Well, sometimes he says that. Sometimes, he says it less frequently. But nonetheless, he has been consistent lately on that one. And then let's be careful. But then, because things will get better. Because people have to believe that. If they don't, they won't get out the door. And then things don't get better. So there is some benefit, I think, to the economy to have the president expressing confidence in public safety and public health going into the fall. Whether that works is just anybody's guess.
Well, another interesting story that crossed the Bloomberg terminal just this morning, the number of undecided voters in recent polls has more than doubled over the last 2 weeks as the president deals with this crisis. Where do you see that playing out? I mean, that has implications for November for sure.
Well, Nathan, that's the really important thing. It's really about the Republican Party. It's about how unified the Republicans stay. They are, really extraordinary at being unified in presidential elections, with the exception of 2012 when some Republicans stayed home, and I think it cost Mitt Romney. Obama probably would have won anyway, but not as big. So this is the big question mark. Does some slice of the Republican Party, perhaps those that are independents, lean independent or in suburbs of major metropolitan areas, for example, that have been hard hit by COVID-19, do they just peel off the president? Last time it was like, oh, he'll lower my taxes, he won't be that bad. This time is, oh, can we afford 4 more years of him? And that's the big question mark, and that'll affect the suburbs in cities outside of Detroit, for example, and Pittsburgh and Philadelphia, and even in Arizona and Atlanta suburbs. So these are all kinds of people that Trump needs. And they went with him in 2016, and the question mark, do they peel off and stay home or go to the Democrats in 2020? If they do, Trump loses. So that's the big question mark. That's why the undecided number really matters a great deal to the president.
Thank you, as always, Wendy. Wendy Schiller chairs the Political Science Department at Brown University. Karen.
All right, Nathan, thank you. It is 6:54 on Wall Street. Time for the Bloomberg Small Business Report with John Tucker. Good morning, John.
Hi, Karen. It's a tough time, of course, for small business with stay-at-home orders in effect for much of the country. For some, it's not just about when this is going to end, but a business will actually rebound once restrictions are lifted. James Lowe is a classical guitarist. He runs the Baltimore School of Music, a small operation with 15 employees. James, what has business been like since the coronavirus outbreak?
We have been down about 40% of our total revenue. We had to cancel all of our group classes. Our music lessons, we've been able to mitigate a bit by going to virtual music lessons, but we've had a lot of people who are not interested in doing that. Losing that person-to-person contact for music lessons is an important part of it. We can definitely still teach through virtual means. It's not quite as effective. But we've also had a lot of our students who have been facing their own economic challenges that have had to pull back on any extra spending in their life. So we've had people that have been furloughed or have lost their jobs that have had to cancel their music lessons because of that as well.
You have 15 employees. What have you had to say or do with your employees?
So far, we've been okay. I think the most challenging part is that we don't know when this is going to end. So we've been able to mitigate a bit for music lessons. So we've definitely had a downturn, but not up to the point where we need to let anybody go or furlough anybody. And we did apply for PPP, and we were able to get that. So we've got a bit of a cushion. The problem for us is we don't know how long this is going to go for. So even as things open up, people are still going to be hesitant to come in for private one-on-one music lessons. In Baltimore, it can be kind of tricky because a lot of our public schools do not have music programs. So we do provide some essential services, but we also have a lot of adult students who are just doing it for fun. And so it tends to be something when you're looking at your budget, something that you can trim down pretty quickly and easily. And it's something you can pick up later. So we tend to be a little bit more expendable than some other essential services.
Yeah. James, thanks a lot. James Lowe, classical guitars owner of the Baltimore School of Music. And we're going to continue bringing you stories of small businesses trying to survive and adapt in the face of the coronavirus pandemic every day at this time on Bloomberg Radio. I'm John Tucker. That is your Bloomberg Small Business Report for today. Karen.
All right, John Tucker, thank you. S&P futures are lower right now. They're down about a point. Dow futures down 38. NASDAQ futures are down 10. 10-year Treasury down 2/32, yield 0.62%. The yield on the 2-year 0.21%. NYMEX crude oil is up more than 11.5%, up $1.62 at $15.40 a barrel. And COMEX gold is up 0.7% at $1,750.60 an ounce. Bloomberg Surveillance is straight ahead with Tom Keene, Jonathan Farrow, and Lisa Abramowitz. For Nathan Haker, I'm Karen Moscow, and this is Bloomberg.
Influential conversation.
The loungewear essentials that ease you into your comfort zone. The Fitbit that helps you step up your fitness goals. The yoga mat that turns your lounge into a studio. With a choice of ways to pay, you can enjoy being the best possible you. You can say yes when it matters most at very.co.uk. Goods and services provided by Shop Direct Home Shopping Limited. Credit provided by Shop Direct Finance Company Limited.
Okay, people, I've got the daily checklist. Who today has eaten dinner for breakfast? Tick. Started a chore you'll never finish? Tick. Done a conference call in your pajamas? Tick. Here's another for your list. BritBox. Streaming the BBC, ITV, Channel 5, and now Channel 4. All in one place and ad-free. So add BritBox to your list and get a 30-day free trial of the biggest box of British box sets. Search BritBox free trial. Tick. Biggest compared to other SVOD providers. Auto renews at $5.99 a month unless cancelled. T's and C's apply.
Looking to freshen up your listening on TuneIn? Head to the homepage to discover something new. There you'll see custom recommendations based on your listening habits, along with new episodes of shows you've enjoyed in the past. Uncover your next audio obsession on the homepage.
I'm Mel Kiper Jr., and to get you ready for the NFL Draft, you can listen to my podcast, First Draft, as Todd McShay, Chris Sproul, and I highlight all the top picks and give you the analysis you need leading up to the draft. Just search ESPN Radio today.
Data. Which segments of Alphabet's business are most likely to come under scrutiny?
Get all the pieces.
They're getting mixed signals from governments.
He's failed to gain traction.
Bloomberg Radio, the Bloomberg Business Radio.com and iHeartRadio apps, and BloombergRadio.com. Bloomberg, the world is listening. From the financial capital of the world, 24 hours a day at Bloomberg.com, on the Bloomberg Business app, and on Quick Take by Bloomberg. This is Bloomberg Radio. This is Bloomberg Surveillance Economics.
In this cycle, we've dealt with a lot of shocks.
It's important to understand what the Fed can and cannot do.
Finance.
There's no asymmetry left in markets. It truly is a zero-sum game.
We will get slower growth. I mean, let's not get confused about that.
Investment.
Very few investors want to own any energy to begin with.
There's a great deal of uncertainty. People are trying to hide in safe places.
Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz on Bloomberg Radio.
From New York City, for our audience worldwide, good morning, good morning. This is Bloomberg Surveillance. Coming up, bracing for another surge in weekly jobless claims as continent-wide lockdowns push Europe into a record slump. Officials on both sides of the Atlantic call for more aid. From the Bloomberg Interactive Brokers Studio, hello Thursday. Here is your Thursday morning price action. After a firmer session yesterday, equity futures down just 0.1% on the S&P 500. Really muted price action in both stocks and bonds in the here and now. Yields up just a single basis point on a 10-year at the moment. A huge focus on the commodity market. The one place over the last month, arguably, you've been able to push through a negative macro view. With Brent crude down to 22, we bounced back another 8% in today's session. $15.50 on WTI, up by around about 12.5% there. But one place you do get a feeling things are getting worse is in Europe. Euro dollar coming in 0.4%. That is a weaker euro off the back of some terrible economic data on the continent. We'll be talking about the data through the next couple of hours as we count you down 90 minutes away from an initial jobless claims number in the United States of America. Full coverage right here on Bloomberg Radio and on Bloomberg TV. Alongside Tom Keene, I'm Jonathan Ferro, together with Lisa Abramowicz. You are listening to Bloomberg Surveillance live on Bloomberg Radio. Lisa, when it comes to the data in Europe, pick an ugly number, make it uglier, and you still won't come close to what we just saw this morning.
An unprecedented collapse. I was reading a number of analyst notes and one person saying these are unimaginable figures. They're unimaginable destruction of jobs and economic activity. The question is really how quickly will the other side be? What will be the casualties? And as we turn our focus to the jobless numbers that we're about to get at 8:30 a.m. Here in New York, this is a global issue. There have been more than 40 million jobs lost in both the U.S. and Europe combined, and that's just those that have filed for benefits, just to sort of give you a sense of the scope of it.
22 million in the previous 4 weeks. Economists looking for potentially 4.5 million extra this week. Lisa, we've reflected on this so many times. It took 4 weeks to destroy what it took 10 years to build. And you just wonder how long it's going to take to recover from this, even as we gradually start to reopen. Secretary Mnuchin talking about hoping, and I emphasize the word hope here, hoping to have the economy fully reopened by the end of summer, late summer. That's the aspiration. That's the goal.
Yeah, but it all really depends on data. And what this whole episode has highlighted is how dependent the global economy is on small businesses. And the question is whether they'll be able to survive and come back after this. And anecdotally, the answer is many of them will not. And how will that sort of hinder the recovery on the other side?
A big focus on the data this morning, a big focus on Tom Keene. He is stumbling from the TV studio in his living room to the next room to get on radio. And hopefully we'll have him with us soon. I'm pleased to say that the guest has turned up on time. Eric Friedman, US Bank Wealth Management Chief Investment Officer. He joins us on the phone. Eric, always great to catch up with you, sir. On the one side, we've got this huge stimulus effort, and on the other, we have to face some terrible data. How do you reflect on those two things at the moment?
Jonathan, great to be with you and the team this morning. It is very much the case that we're at that point of now observing just how long it will take for companies and economies to recover. And if you think you look at market pricing right here, if you look at futures this morning, we are literally to a tick at the halfway point between the lows that we saw on March 23rd and the highs that we saw on February 19th. So to Lisa's point, and if you look at the services and the manufacturing data out of Europe this morning, we know the numbers are going to get bad and they're going to probably get worse. And so the question now is time, is duration. So there are literally companies and real estate investment companies and others that are literally looking at things by the month and saying, if we get through in midsummer, we're going to be okay. But if it takes longer than that, then we have problems. So markets have seemingly priced that in effectively at this point. And as an investor, one of the things we have to think about is how are we positioned? So we really have more of a barbell on. We've got some things in client portfolios that should things get materially worse, that convexity will kick in and will help clients. We also have an upside claim on scarce growth stories that we think will do well in an upside environment. So again, we're at that point of really having to wait and observe what the policy absorption is and of course, what the reopening trigger looks like.
Eric, how do you determine if something is priced in at a time when nobody knows how deep or how long this recession is going to be? I mean, just on the earnings calls we've gotten so far in S&P 500 companies, unprecedented is the word of the day. It's been used an unprecedented amount of times with more than 3/4 of the companies using that word at least once in their earnings calls. How do you take that and make that into a model?
Probably the best thing to do, Lisa, and this is where you've done such great reporting over the years, is looking at credit. And if we look at what we're seeing right now with respect to credit, we saw on March 23rd, of course, when equities hit their hopefully most recent low, the price of credit shot up to, let's call it 1,100 basis points over the bar cap ag. So that's something that if, I'm sorry, versus 10-year treasury. So if you look at the bar cap ag high yield to worst versus the 10-year treasury, that hopefully peaked the same day that equities hit their low. So that was at 1,100 basis points over. Right now, we're at about 7.5%, 8%. So that's about 2 percentage points higher than where we normally are. And a lot of the differentials that we're seeing are very sector specific. So some of the sectors you'd expect, like travel, like leisure, like energy, those have much more elevated price of credit. But across the broad market, we should be elevated, but not uniformly elevated. So that to us says that there's at least been some efficiency with how people are looking at the forward path for these sectors. So that to us is where you have to start with models. And then to your point, I think that with respect to earnings reports, and we're getting a lot of them right now, the most important thing that we're looking for is a plan. We get it that companies have to throw some degree of caution about their ability to predict exactly how things will play out this summer, but they have to have a plan. And those companies that have a plan and a reasonable guidance, those companies we think will be rewarded. Those that are saying, hey, look, we just don't know, that's been, of course, a very different story.
Eric, everybody's got the same plan. They're all desperate for revenue growth, and the 12 stocks that are displaying revenue growth are going to the moon. When do you own enough of those stocks? When do you own enough of those darling stocks that everybody's pricing to perfection?
Yeah, it's a great question, Tom. I think the key thing that we're looking at is for those companies that are being rewarded, and again, the stay-at-home stocks, the scarce growers, the secular growers. At some point, earnings multiples will matter, and we think that even with expectations not fully rained down for this year or next, that there are companies that can provide some visibility. So ultimately, we think that if there could be that overstep, if you will, and if we see too much disparity between the scarce growers and those that are obviously waiting and hoping for an improved environment, that spread could get too high. We don't think we're there yet, and there are lots of baskets you can look at, things you can look at your Bloomberg terminal that really gauge those differentials. So again, we don't think we're there yet, but we're of course knocking on the door.
Just on the equity side, I think if you ask some people today, Eric, what's been the best performer over the last month, I don't think they would name the energy names, but it's been the energy names. It's been the risky part of the market. It's been the energy sector, despite what we've seen on the energy side in commodities. What explains that for you, Eric?
I think, Jonathan, one of the things that you saw was almost a binary response from March 23rd onwards, and just looking at S&P level 1, to your point, that's been a bit of a head scratcher in terms of those particular companies that have done very well since that of course crescendo that we saw just a couple of weeks ago. I mean, you can also chalk up looking at the same metrics. Healthcare is next, followed by utilities. I mean, energy up 42%, healthcare up 31%, utilities up 31%. The cash flowing names like utilities, that seems to make some sense. Having some scarce cash flow is going to be valuable for investors. But real estate, back to that comment made earlier about some of the binary situations we'll see, if companies cannot get back up and running in a matter of a couple of months, there are some real estate companies that just are not going to see rent rolls improve. They're not going to see tenants come back to their buildings. So some of those more binary stories in a beta bounce certainly have performed well. We still think the places you have to remain technology, healthcare. Those are our two favorites, both in terms of long-term and short-term. And some of those more binary stories, also small cap is a place there where we're not advocating clients put a lot of money in, but that's a great place to gauge, again, the health of some of those more binary outcomes that we'll know a lot more about in the next 2 months.
Interesting stuff, Eric. Appreciate your time, and hopefully we'll catch up again soon. Hope you and yours are doing really well. Eric Friedman there, US Bank Wealth Management Chief Investment Officer. Let's get you some news, shall we? Some headlines worldwide. We can do that with Michael Barr.
Good morning, John. Lisa, Tom. Both President Trump and his top infectious disease specialists say they disagree with the decisions of Georgia Governor Brian Kemp, who is moving forward with plans to reopen shops in his state without meeting the criteria laid out by the White House. At last night's news briefing, the president said he thinks Kemp can wait just a little longer.
I told the governor of Georgia, Brian Kemp, that I disagree strongly with his decision to open certain facilities which are in violation of the Phase 1 guidelines for the incredible people of Georgia. They're incredible people.
UN Secretary General Antonio Guterres says the coronavirus pandemic is a human crisis that is fast becoming a human rights crisis. The UN chief said today that there is discrimination in the delivery of public services to tackle COVID-19, and there are structural inequalities that impede access to them. Several damaging storms and tornadoes were reported in parts of Oklahoma, Louisiana, and Texas yesterday, causing significant damage and killing at least 6. Kip Robbins' neighborhood was devastated when a tornado struck near Yaphan Cove, Texas. After the storm passed, Robbins says he discovered a 77-year-old elderly neighbor buried under her destroyed home.
Told her, to keep talking to me. And as I'm trying to dig around in what was left of her house, we were able to find her and get her out.
Robbins and other rescue workers were able to transport her to a waiting ambulance. Don't forget, tonight is the virtual NFL Draft Round 1. Global news 24 hours a day, on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Michael Barr. This is Bloomberg, John.
Michael, there is nothing else to watch. And I don't even watch American football, yet I still might watch this because there is literally nothing else to watch. This is the only sporting event on TV.
John, can't you watch Premier League like the Tots from 1973?
From 10 years ago? I've done that already. I've been watching the games from 20 years ago. There is nothing left. Get me up to speed on Gronk. Isn't he joining Brady down in Tampa?
Listen
isn't that the latest?
I even read that, which really tells you something.
Tell us more, Lisa.
Good morning, Boston.
Yeah, seriously. I mean, honestly, I want sports to return, and that's saying something.
It sounds
there
like,
we go.
You know what we need? We need a road trip to Tampa. Just
that would be
gentlemen play.
Then we've got a producer from Tampa.
Burns Steakhouse. I can see it. The three of us at Burns Steakhouse.
Yeah.
Up on the second floor, the dessert floor that they have, you, me, the Gronk, and Tom.
It's the first time you've never mentioned a beverage of your choice. The dessert
I
house.
usually at Burns eat in the bar because the service is just exquisite.
Okay. I thought you always ate at the bar.
That's true too.
Equity futures stable this morning. The euro really negative. We come off a third of 1% with a bit of a bounce. The data ugly. More data still to come this morning. Good morning. This is Bloomberg Radio.
Why is delivering the best client experience a top priority at BNY Mellon's Pershing? Michelle Feinstein, Director of Client Engagement, explains.
Today's investors want a financial relationship that's on demand, customized, and leverages the latest digital technology. At BNY Mellon's Pershing, helping advisory firms and broker-dealers create great experiences for their clients is our priority. Through our integrated wealth experience, we give you a high-touch service, flexible technology choices, and expert insights, so you can deliver a highly personalized experience to your clients at every step, from onboarding to wealth planning, to performance analysis and more. And because we're part of BNY Mellon, you'll benefit from more than 230 years of strength and stability. At Pershing, we're personally invested in your success.
Visit Pershing.com to learn more about Pershing's integrated wealth experience. Pershing LLC and Pershing Advisor Solutions LLC are both members of FINRA and SIPC.
Message and data rates may apply. T&C and privacy terms can be found at babbel.com/terms. Please don't text and drive.
Have you wanted to speak a new language, but you thought it'd be too hard or take too much time? Then try Babbel for free by texting EXPLORE to 64,000. In just 15 minutes a day, you'll be on your way to speaking a new language in just a few weeks. And right now, you can try Babbel for free. Babbel starts out teaching you words and phrases by matching them with pictures. You won't believe how easy the interactive program is. Soon the sentences get a little bigger, and before you know it, you're having simulated conversations voiced by native speakers. And because Babbel is crafted by language experts and uses the spaced repetition method, in just 10 to 15 minutes a day, you'll be speaking the language of your choice with real confidence. With Babbel, you can speak a language. Just text EXPLORE to 64,000 and start your first lesson in the language of your choice for free. Download the Babbel app or text EXPLORE to 64,000 and try it for free. Text EXPLORE to 64,000.
Influential conversations from Bloomberg.
Did you know that players of People's Postcode Lottery have raised over £500 million for charities and good causes? They've also won £47 million in prizes so far this year, and it could be your postcode next. Visit postcodelottery.co.uk/radio before midnight on the 23rd of April to play in the May draws. PPL managed lotteries on behalf of good causes. 16 plus, conditions apply, play responsibly.
Dating can be tricky, especially when you can't meet face-to-face. So it's time to get creative with the easy way to replace physical dates, Video Call from Bumble, the dating app where women make the first move. Here's Anna Williamson and Tom Reed-Wilson with some tips on connecting online.
It's a bit harder to flirt with limited body language, but nothing beats a smile and some eye contact to show them you're interested.
And have an activity plan for your date. This will help break the ice.
Download Bumble today.
Okay, people, I've got the daily checklist. Who today has eaten dinner for breakfast? Tick. Started a chore you'll never finish? Tick. Done a conference call in your pajamas? Tick. Here's another for your list. BritBox. Streaming the BBC, ITV, Channel 5 and now Channel 4. All in one place and ad-free. So add BritBox to your list and get a 30-day free trial of the biggest box of British box sets. Search BritBox free trial. Tick. Biggest compared to other SVOD providers. Auto renews at $5.99 a month unless cancelled. T's and C's apply.
Breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and on Quick Take by Bloomberg. This is a Bloomberg Business Flash.
And I'm Karen Moscow. U.S. stock index futures and European shares have been fluctuating as investors weigh the latest signs of the coronavirus's impact on the global economy. Crude oil rising above $15 a barrel in New York. We check the markets every 15 minutes throughout the trading day on Bloomberg. S&P futures are little change. Dow futures down 35. NASDAQ futures up 3. The DAX in Germany is down 0.1%. 10-year Treasury down 1/32, yield 0.62%. The yield on the 2-year 0.21%. NYMEX crude oil is up 11.5%, up $1.59 to $15.39 a barrel. COMEX gold is up 1% or $17.70 at $17.55.80 an ounce. The euro 1.0788 against the dollar. British pound 1.2365 and the yen 107.51. And Blackstone Group saw asset values across most of its business segments plunge in the first quarter because of the economic fallout from the coronavirus. And that's a Bloomberg Business Flash. Tom, John, and Lisa.
Karen, thank you. Thank you very much. Some controversial comments from Senate Majority Leader Mitch McConnell in the last 24 hours. I would certainly be in favor of allowing states to use the bankruptcy route. He went on to say, we're going to push the pause button here because I think this whole business of additional assistance for state and local governments needs to be thoroughly evaluated. Tom, a little bit of tension on the horizon.
John, I am so glad you brought this up, and we heard some of this across our Bloomberg reporting today, the cacophony right now and the cross currents, just like with CDC as an example, folks, in the last 24 hours has been extraordinary. Kevin Cirilli is trying to make sense of this. Kevin, certainly everybody's playing to your constituency. Which constituency is the Senate Majority Leader playing to when he tells states they should go bankrupt?
It's such a great question. I think it's here's what you have to know about Senate Majority Leader Mitch McConnell.
Please.
He's in many ways a political chess player, but he's also a conservative, ideological philosopher in many ways. And I think that he's playing a longer game of what American conservatism means and represents in this particular moment. I mean, we've talked about this even before the pandemic, about where conservatives are in terms of the national debt and all of this spending. And now, flash forward to this particular pandemic, where every conservative think tank in town, from AEI to the Heritage Foundation, are having these conversations via virtually, but still having them for where this goes post-pandemic. And he's what he did essentially, that's very wordy. What he did is lay down a line in the sand and said, this is where I am. I still care about wasteful spending.
Did the fiscal hawks just make a comeback in the last 24 hours, Kevin? I mean, look, I say that's the extreme headline. We've also got to be clear that a little bit later today we're expecting a $500 billion bill to pass, so I don't want to get too far ahead of myself here. I'm just wondering, just very subtly, just faintly, whether we can start hearing the chirping of the fiscal hawks again.
Yeah, I was just reading the Daily Stoic, so maybe that's why I was too philosophical there, Jonathan. Yeah, no, you're absolutely correct. I think that all of that is going to happen in due time. But for the most part, I think what Leader McConnell did was say, listen, I hear you if you're concerned about this. I'm aware of it. And as we head into economic stimulus round 4 negotiations, this is still on his mind. This is not just going to be free money for whoever wants it. And so that's what I think Leader McConnell was trying to accomplish with Hugh Hewitt.
Meanwhile, Kevin, we have Nancy Pelosi, the House Speaker, coming out and saying a big package is going to be coming to just help the states and local governments. And meanwhile, President Trump himself seems amenable to the idea of expanding the deficit in order to give aid to those who need. Just to give you the sense of the controversy within the Republican administration, Mnuchin saying this is a war and we need to win this war and we need to spend what it takes to win the war, and McConnell saying Congress needs to press the pause button. So how is that conflict going to resolve?
I would never count out Senate Majority Leader Mitch McConnell. And even to your point, to your point, Lisa, in terms of I was prepping for this hit. I mean, look at Georgia. Georgia Governor Brian Kemp, he's a Republican. I mean, he's someone who has been publicly not necessarily in a back and forth with the president, but the president yesterday saying that he thinks it's a little too soon for barbershops and nail salons to open, and Kemp's moving ahead anyway. Take that and contrast it with Governor Hogan, a more centrist Republican, and his back and forth with President Trump. It's fascinating.
I'm fascinated, Kevin. Does the president look at his poll ratings? I mean, I know he's got 3 TV sets up there, and they watch Fox, and Fox. I get that. But, Greg Villiers pointing out he's really not doing all that well in the polls recently. Does he care?
He does care, and Greg's note this morning was great to look at just the dip that the president has seen in the approval ratings. And if you dig deeper into those polls, Tom, it's because of senior citizen voters and the president's.
Watch yourself.
I didn't say anything bad.
No, but you don't have to. Farrell will pick up on that.
But seniors have grown frustrated with the president. But look,
really?
It's still this is. Oh, it's week 9 or whatever. Anyway, I'm getting you've caught me flustered, Tom.
Just run, Kevin.
But it'll come back, is what they're saying.
We're all flustered.
I'm going to stop talking. How about that?
Probably the best thing.
That's what Vettel said.
I know a frustrated senior citizen.
Do you? Oh, wow.
I was walking down Madison Avenue yesterday, folks, and there's a wonderful bar. I'm going to say keep it nameless. And, of course, they're shut down. Their doors open. They got the French chalkboard out front saying, we make cocktails to go. That was the best thing I saw yesterday.
Hey, Tom, look, a lot of companies struggling to survive. And in about 1 hour, 6 minutes, we'll be talking about the jobless data again. And I can't help but think that this data point, this one data point alone, is putting so much pressure on the administration to talk about reopening.
Totally agree. Folks, I'm going to give you a little bit of real world here, and we've all got our real world stories. We're walking yesterday. You walked by Mount Sinai in this city, and you can see the shell shock. Person to person, they walk by, and they're just numb coming out of that hospital, fighting the battles, and all the small businesses, John, around those hospitals are shut down.
And Lisa, we've been given the time, late summer maybe. You know, when it comes to forward guidance, when it was central banks, I always hated time contingent forward guidance because it was always about a hope, about the future, about where we would and wouldn't be. I always preferred data contingent guidance. This is where we need to be to do X, Y, and Z. This is the data we need to see. That for me is a far better way of guiding the public than saying late summer, let's hope.
Absolutely, especially because the key question here is testing and tracking capabilities, and the clarity there has been anything but clear. I mean, we aren't getting a sense of that. I think that is the correct focus.
Equity futures this morning, almost totally unchanged, up 2 points on the S&P 500, positive 0.1%. In 1 hour and 5 minutes, we will have more jobless claims data from the United States of America. In the previous 4 weeks, totaling north of 22 million. The median estimate, and let's be clear here, it has been very difficult to gauge where this economy has been. A lot of misses, some big misses around these data points. The median estimate...
Hey y'all, Jeff Foxworthy here. Now, if you've ever found yourself repeating the same thing over and over for 75 years, you might be Smokey Bear.
Only you can prevent wildfires.
That's why I'm filling in for Smokey to switch things up, because there's a lot more to say. And I should know because my grandfather was a firefighter. And one of the things he taught me is that the people that love the outdoors the most are often the ones accidentally starting wildfires, which means always BYOB. No, bring your own bucket to the campfire. And be extra careful with things like burning yard trimmings. Don't just walk away, or chances are you might be starting a wildfire. So for the love of the outdoors, go to SmokeyBear.com to learn more about wildfire prevention. Brought to you by the U.S. Forest Service, your state forester, and the Ad Council.
25 years ago, NJIT graduate Dick Sweeney co-founded Keurig Green Mountain, a company whose incredible innovations changed the way the world brews a cup of coffee. Today, he lectures widely on business leadership and is a strong advocate for NJIT's work to combine business education with the power of STEM.
NJIT is definitely fostering the innovative thinking for budding entrepreneurs simply because that's the world we live in. NJIT is producing students that have been trained, educated, and given the business acumen to be a contributor to a company. The distinct mission is to develop great STEM scholars. The attributes I've always looked for in team members are heart, smarts, guts, and luck. So we want people with passion, intelligence, courage, and never discount luck. The student coming out of NJIT has experienced all of that.
NJIT, New Jersey Institute of Technology. Learn more at njit.edu.
This is a Bloomberg Money Minute.
Okay, people, I've got the daily checklist. Who today has eaten dinner for breakfast? Tick. Started a chore you'll never finish? Tick. Done a conference call in your pajamas? Tick. Here's another for your list. BritBox. Streaming the BBC, ITV, Channel 5, and now Channel 4. All in one place and ad-free. So add BritBox to your list and get a 30-day free trial of the biggest box of British box sets. Search BritBox free trial. Tick. Biggest compared to other SVOD providers. Auto-renews at $5.99 a month unless cancelled. T's and C's apply.
This is a message from the government. Coronavirus is a national emergency. Life-threatening for people of all ages everywhere in the UK. To help save lives, stay home. Only go outside for food, health reasons, daily exercise, or to work. But only if you cannot work from home. Stay home. Anyone can get it, and anyone can spread it. Coronavirus. Stay home. Protect the NHS. Save lives.
In case you didn't know, TuneIn lets you listen to the same radio stations you pick up on your home or car radio, except you can hear them from anywhere. If you want to find a station from somewhere else in the world, navigate to the By Location section under Browse. Keep exploring with TuneIn.
Get your daily dose of NFL shop talk with these great podcasts on TuneIn. Start your morning off right with Around the NFL.
Injured, depleted roster into the playoffs, and I didn't think they belonged in the playoffs.
I think overall, though, it was a great divisional round weekend because you got the first one.
Run into the end zone with the Move the Sticks podcast.
We had a fun little Zoom cocktail hour last night.
Oh, yeah.
What a star-studded affair. Greg, you were there for the earlier part, but it really popped off a little later on. We had Zach Goldman.
And dive deep into the sidelines with the Peter King podcast.
On the occasion of his 50th birthday, come down and record a little bit of retrospective on the life and times of Brett Lorenzo Favre.
That sounds like a bestseller.
It sounds like a precursor with Funeral. That's what it is.
I wasn't thinking that.
Explore these and more hard-hitting NFL podcasts right here on TuneIn.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119 and around the globe. The Bloomberg Business app and BloombergRadio.com. This is Bloomberg Surveillance.
From New York City, this is Bloomberg Surveillance. For our audience worldwide, we're live on Bloomberg Radio. 2 hours away from the opening bell in New York, equity futures on the S&P 500 almost totally unchanged, up just a single point on the S&P. In the bond market, a couple of days ago, it came very close to all-time lows on a closing basis on a 10-year maturity. This morning, yields unchanged at 0.62%. Some ugly data out of Europe this morning. We pushed that data through the FX market, and it means a euro that underperforms. Euro dollar in 0.4%. Tom, a PMI with a 13 handle is just totally unheard of. That's what we had out of Europe this morning.
Unheard of is a great right phrase, John. This, folks, is a diffusion index with a 50 center tendency. Above 50 is good. 48, 47. What, John? 43 is grim. And then there's that statistic.
Yes, 40 is bad. 30 is deep recession. 13 is the shutdown we have right in front of us, just totally unprecedented. And for the markets, this has been really hard to push through because we've had so much stimulus elsewhere. One place you have seen this shutdown really captured is in the commodity market. In the physical markets, you have got a clear supply and demand, and when no one wants the crude, and there's very few places to store it, even if you do want it, you get what we've seen over the last week, Tom.
Paul Sankey with Mizuho is with us, part of an acclaimed team years ago with Adam Szymanski and company, and now at Mizuho doing granular work on oil. Paul, just simply to your research note for this weekend into Monday, what part of this collapse are you most focused on?
Well, we're obviously following the end of the lockdown, but as you know, some of the data, for example, out of Japan is headed in the wrong direction completely, but as you know, the overall problem here is a demand one, and generally analysts, as you also know, Tom, focus far too much on the supply side. The fact is that demand here is so low relative to anything we've previously seen before. It's just a major problem managing the market. That's why we've seen negative prices. It's a physical challenge to manage the market, and that's manifesting itself very clearly in the tape.
Paul, are we going to see negative prices again on the June contract?
It depends if people are dumb enough to get caught again. I think once you do go into that negative situation, where you've got to get out at any price in order to avoid taking delivery of the crude, you could notionally go to any kind of a price, sort of day before. I think what happened here wasn't so much the USO; it was more CTAs, commodity trade advisors, who have to get out the day before settlement. They're not allowed to hold a physical position. And I think they were probably the sellers that caused us to go to minus 40. Once you break loose into that sort of territory, obviously you can go just about anywhere. It's not, if you like, a totally real price, but it's certainly showing you that there's a massive problem with managing oil physically at the moment.
I'll tread carefully here, really carefully if I can, but some people in the oil patch are obviously very unhappy with the price action. Continental Resources' Harold Hamm came out and asked for a probe into what he thinks suggests might be manipulation in the commodity market. Paul, it made me wonder, and I ask this question with the greatest respect for anyone working in the energy industry, but whether any of these owners, of say Continental and others too, have had the reality check about what's about to happen and the support that they may or may not get from the government.
Well, I think they were definitely slow to recognize the scale of the problem. I wouldn't single out any particular name for this. I think the industry in general couldn't quite believe what was happening. Obviously, it was an incredibly quick event. I mean, we went from sailing along fairly normal at $60 a barrel on the first of the year to a total and utter collapse within 3 months that occurred over the course of about 2 weeks. So I'm not surprised they were caught short. However, very early we were calling for negative prices, seeing how bad the problem would be. And I'm surprised, for example, someone like ConocoPhillips was quite slow to cut. I mean, they've got there now, but it was not as quick a response as we expected from the industry, given the severity of the downturn. I think that we have been a bit negatively surprised by how slow it seems it's going to be to get out of this, unfortunately. And that, I'm sympathetic. Obviously, it's a very difficult situation to manage.
I think just to build on that point, there also was a probe by the CFTC into other trading that was revealed yesterday by Bloomberg into possible manipulation. And there's a real question here. How much was some of the turmoil stemming from people with advanced knowledge of negotiations out of Russia, et cetera, versus a lack of an awareness of the reality, or perhaps denial of the reality that still is being denied to this day?
Well, that's the crazy thing about the whole situation with OPEC, is that there's really no limitation on insider trading. I mean, I guess the CFTC can try and go after people, but the reality is this is an active cartel that's trying to manipulate the market. It's pretty much dead on the door.
And also, Paul, just reflect on, if for anyone that's ever been to Vienna or spoken to someone that's been to Vienna and watched how this meeting operates, the idea that some information slipped through the cracks, I mean, come on, it doesn't surprise me at all.
I would say that it's an active competition to be first to give the inside information. But, that's the Wild West of the oil market. And, the regulator, I think, can yell at the Russians or the Saudis or whoever. I mean, I'm not singling anyone out. It's across the board an active attempt to manipulate the market. I mean, it's quite open.
Paul, if there ever was a force majeure, this is it. And I get that a sovereign wealth fund has to take its lumps and move on. What does Saudi Arabia do? What does Kuwait do? What does Nigeria do? How do they affect a force majeure in their core economy?
Well, I think you can see clearly what's happening strategically through the Saudi official selling prices, right? And what we saw here, interestingly, I think very much post the President Trump's intervention, was that prices were raised by Saudi Arabia to the U.S. to reduce their sales to the U.S., but at the same time they maintained a very aggressive pricing into Asia, which, by the way, the next day was matched, if not undercut, by Iraq, where I think one of the big tensions in the market today is the Saudi versus Iraq stroke Iran price competition into Asia, which is very interesting. In terms of what they can actually do, that's been a major question, and we're seeing some very hard, our take on the OPEC meeting was it's very much rearranging deck chairs on the Titanic, insofar as you're going to have to cut whether you like it or not. A very good example being Nigeria, Tom, where they've just simply been unable to sell their oil because there's no market, and that's obviously what we saw with the negative price as well. It's just an epic challenge because, as you know, the oil industry is efficient and it runs with relatively low inventory. This just surpasses any capacity to actually manage the oil, short of shutting down production. The Saudis are in good shape in that regard because they're so heavily invested with such a sophisticated oil system that they can just turn a volume knob and change their production. Others, such as Nigeria and such as producers in the Permian, are going to find it more difficult to do an orderly shutdown.
What price does the cartel need to break even on a fiscal basis? Just the stability of their governments. What price do they need on a blended basis?
That's fairly well reported by the IMF, Tom. So you'll see about 70 to 80 for Saudi, about 40 to 50 for Russia.
40 to 50, wow.
I read 150 for Algeria. One of the amusing conceptual things I've highlighted is, what do you think the break-even is for the U.S. government? It's probably about $1,000 a barrel based on the current deficit. But but no, in all seriousness, there's an issue there. Of course, the Saudis will tell you they have the capacity to raise debt. So they can run at a deficit, obviously. And as you know, their cash break-even is closer to $10 a barrel.
They can get a loan
but
from
it's going to be hugely destabilizing. I mean, this is going to really cause problems in many places, and I think Russia is probably the most interesting, in terms of the difficulties they're going to face financially. Iran, obviously, is another major candidate for serious problems.
Let's do this again. Paul Sankey, thank you so much with Missoula. Just really, really appreciate it this morning. Bloomberg Surveillance this morning, always brought to you in the Bloomberg NJIT STEM Report, brought to you by New Jersey Institute of Technology, offering an MBA that provides STEM professionals with a technology-focused experience. Learn more at njit.edu/MBA. Here's Bob Moon.
Tom, Lisa, John, good morning. Here's what's making news in science, technology, engineering, and math. A cybersecurity theme this morning. Email app vulnerabilities may have allowed hackers to exploit the iPhones of hundreds of millions of people for years. The San Francisco-based cybersecurity firm ZecOps found 2 exploitable vulnerabilities in Apple's Mail app and alerted the company, which released a beta update this month. A specially crafted email can compromise iPhone or iPad data if it's opened in the Mail app. Apple confirmed a full update is forthcoming to fix the bug. Google is warning that government-backed hackers are taking advantage of COVID-19 to spread so-called phishing and malware scams. Google's threat analysis group says dozens of groups have switched tactics to COVID-19 themes. In one case, they tried to snag Google account credentials using an offer of free meals and coupons in response to COVID-19, even sending links to bogus online ordering and delivery options. This after the New York Times reported that U.S. officials believe operatives backed by China spread COVID-19 misinformation in a bid to sow discord across America. Who's Zooming who? As working from home and online schooling have become the norm, rivals are rushing to emulate the Zoom video conferencing app. Now Skype is adding a custom background option. Microsoft's Teams app added that feature earlier this month, and a Zoom-like gallery view is now part of the Google Meet video chat app. It now supports a Brady Bunch-style grid of up to 16 people, previously limited to 4 at a time. That's the Bloomberg NJIT STEM report. Tom, Lisa, John.
Bob Moon, thank you, sir. Thank you very much. Your headlines, your news worldwide. Good morning. To Michael Barr.
Good morning, John, Lisa, Tom. It's a major accusation from one of the key public health officials working on the coronavirus vaccines. Dr. Richard Bright says he was removed from his post this week because he claims he insisted on rigorous science-based vetting of hydroxychloroquine, the malaria drug that's been embraced by President Trump. Dr. Bright declared science, not politics or cronyism, has to lead the fight against the virus. Dr. Anthony Fauci, the nation's top infectious diseases expert, warned state officials that the coronavirus could rebound if they move too quickly in reopening their economies.
I plead with the American public, with the governors, with the mayors, for the people with responsibility. Although I know one has the need to leapfrog over things, don't do that. Do it in a measured way. This is a successful formula.
Fauci specifically urged Georgia Governor Brian Kemp, who plans to reopen a number of businesses in the state tomorrow, not to move too quickly. Nevada Governor Steve Sisolak is not ready to open the state back up. However, Las Vegas Mayor Carolyn Goodman has called the lockdown total insanity. Speaking to CNN, Goodman was asked why is she calling for reopening the city while refusing to provide any social distancing guidelines on how to do so safely.
I am not a private owner. That's the competition in this country, the free enterprise, and to be able to make sure that what you offer the public meets the needs of the public.
Goodman says right now we're in a crisis health-wise, and so for a restaurant to be open or a small boutique to be open, they better figure it out. That's their job. That's not the mayor's job. Global news 24 hours a day on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Michael Barr. This is Bloomberg. John.
Michael Barr, thank you, sir. In around about 47 minutes, we will have some data in the United States of America. Initial jobless claims, the median estimate 4.5 million. That will come at 8:30. At 9:45 Eastern, we'll have some PMIs out of America too. The preliminary read for services, 30.0. For manufacturing, 35.0. This is a preliminary read, Tom, for the month of April.
That's just, folks, I can't convey how that's unimaginable until 2 months ago.
Unreal. And you put it together with the European data, which was just absolutely awful earlier this morning.
Yeah, the five-year break-evens in Europe are crushing. They have separated from the United States, signaling disinflation.
Equity futures this morning, positive 2 points, up almost 0.1% from New York. This is Bloomberg Radio.
With a Bloomberg Business of Sports report, I'm Michael Barr. Former Yankees slugger Alex Rodriguez and his fiancée Jennifer Lopez are reportedly interested in buying the New York Mets. Variety reports unnamed sources say A-Rod and J-Lo have retained J.P. Morgan Chase to raise capital for a possible bid.
Facing a one-year delay to the Summer Olympics and an economy devastated by the coronavirus pandemic, the CEO of the U.S. Olympic and Paralympic Committee says they plan to cut its budget 10 to 20% through 2024. The U.S. OPC's current four-year budget is set to top $1 billion. Telenet Group has sent a formal request to Belgium's Federation of Professional Soccer Clubs to discuss refund of advance payment for the TV broadcasting rights for the season 2019-2020. And that is a Bloomberg Business of Sports report. I'm Michael Barr, brought to you by Grainger, offering supplies and solutions for every industry. Visit Grainger.com.
Asset managers who seize change to launch new strategies, add distribution channels, or exploit new technology to re-engineer the investor experience are often rewarded. However, in an industry paralyzed with complexity, few act with agility or decisively. Few run their businesses strategically, yet the most competitive managers in the market know with the right partner and a flexible operating system, you can. Go boldly toward change with SEI Investment Manager Services.
Determination and operational strength are both essential factors for growth in asset management. I'm Steve Meyer, President and Head of SEI's Investment Manager Services Division. We know that disruptive forces create opportunities around the world. If you see potential in change, our industry specialists will maximize SEI's integrated platform of data and risk management, global investment operations, compliance support, and investor services to position your asset management business for success. Come grow with us.
With SEI Investment Manager Services, you lead the charge in a competitive marketplace. Learn more at SEIC.com/seize change.
Global news.
Okay, people, I've got the daily checklist. Who today has ignored a call on purpose? Tick. Talked yourself out of a workout? Tick. Spent far too long scrolling on your phone? Tick. Here's another for your list. BritBox. Streaming the BBC, ITV, Channel 5, and now Channel 4. All in one place and ad-free. So add BritBox to your list and get a 30-day free trial of the biggest box of British box sets. Search BritBox free trial. Tick. Biggest compared to other SVOD providers. Auto renews at $5.99 a month unless cancelled. T's and C's apply.
Where will 2020 take you? Somewhere where people care. About each other. About our planet. About creating a better world for everyone. And becoming the best versions of yourselves. Join a community of like-minded individuals at the University of Winchester. Make sure to accept your offer by the UCAS deadline and visit our website to find out more. See the bigger picture. Be the difference. Go to winchester.ac.uk.
24 hours a day at Bloomberg.com, the Bloomberg Business app, and on Quick Take by Bloomberg. This is a Bloomberg Business Flash.
And I'm Karen Moscow. And U.S. stock index futures are little changed this morning as investors weigh the latest signs of the coronavirus's impact on the global economy. Crude oil rising above $15 a barrel in New York. We check the markets every 15 minutes throughout the trading day on Bloomberg. S&P futures, again, little change. Dow futures down 50, NASDAQ futures down 2. The DAX in Germany is down about 0.2%. 10-year Treasury, little change, yield 0.62%. Yield on the 2-year, 0.21%. NYMEX crude oil is up 13%, up $1.79 at $15.58 a barrel. COMEX gold is up 1% or $16.60 at $17.54.90 an ounce. The euro 1.0773 against the dollar. British pound 1.2337, and the yen is at 107.53. One of the most recognizable names in the aluminum market offered little optimism for the industry as it's rocked by the coronavirus crisis. Alcoa, the top U.S. aluminum producer, said the extent and duration of the pandemic is unknown and, in a rare move, suspended its market outlook. And that's a Bloomberg Business Flash. Tom, John, and Lisa.
Karen, thank you. Thank you very much. A little bit of tension on the horizon in Washington, D.C. House Speaker Nancy Pelosi said a major package of aid for state and local governments would be the next big focus. Senate Majority Leader Mitch McConnell, Tom, he wants to hit pause. There is some daylight between the leadership in Washington.
Here's the pause. John, this is from a celebrity small business guy who emailed me yesterday. Quote, I make everything in America. I'm still paying my workers, and I've gotten zero from any grant program. This administration gives me little reason to make in America. Henrietta Trace joins us now from Veda Partners. There's the real deal, Henrietta. That guy is a big deal. He's famous in what he does. He's got 30, 40, 50 people lined up doing what they do, and he's gotten $0. He's had it. Is he going to get a check this week?
Well, hopefully he can get to be part of the new tranche of funding. I do expect it to go through. And the piece I heard from staff most recently this week was, this PPP program will run out again, and then we'll have to refill it up. But it's taking him longer and longer to do that each time. So hopefully he'll get in on this round, but there's a lot of businesses out there, and he's not alone, unfortunately.
Henrietta, it's going to take longer and longer, especially as other issues creep into the PPP negotiations, in particular funding for states and municipalities. And we see this battle heating up with Senator Mitch McConnell coming out and saying he'd like to press the pause button. Meanwhile, House Speaker Pelosi coming out and saying this is really an imminent need. How likely is it that we are going to see states pushed into bankruptcy, as Mitch McConnell has said, rather than get aid from the federal government?
Well, I think the scenario where states go into bankruptcy is pretty catastrophic, and I don't think it's a perfectly thought out idea. I think everybody is spitballing ideas right now. There is not one cohesive plan on how to deal with states, but I do think that there will be more funding that goes out. But for right now, what's happened is that it's turned into a state-by-state issue where it's more partisan than based on data, which I did not see coming, I have to admit. If there's a pandemic, I don't care if it's a blue state or a red state, and I assume that they wouldn't either, but it's sort of morphed into that. What I ultimately expect will happen is sort of what we saw evolve over the first three packages, where instead of talking about, okay, every single state gets the same amount of aid and we're just going to throw it all out there to everybody, they're going to start coming up with some sort of metric. So if you are an especially hit with COVID-19 by, X metric that they decide, whether you've got X amount of hospital patients or X amount of cases, they prioritize the funding to you, and that is ultimately what the bill emerges as in subsequent rounds of stimulus. But obviously from that, there's so few details. They're a long way off is the point. And we're probably going to have a conversation and at least headline risk about bankruptcies, about default, about what that could mean for the states in May and June.
Henrietta, I'd like to spend just a couple of minutes thinking about the future and building on something that Tom just mentioned. With regards to onshoring and supply chains, it's pretty clear that this is fertile ground for protectionism on two fronts, immigration and on trade and supply chains as well. Do you see an effort coming together in Washington where a pool of aid is made available for companies who want to bring supply chains, production back home?
I think it's an interesting concept. It could be. You're kind of essentially trying to encourage somebody to repatriate. That's something I've discussed most often around the cruise lines. Do they want to come and domicile in the United States and then try to get some sort of aid package? Members have been a little reticent to provide that. I think, quite frankly, there's so much need, as Tom mentioned, from the guy who's already here to get money, that there is not enough time to think about what else can we also do for the folks who might come back from here. So there's a growing optimism that companies will come to the United States, whether it's out of a sense that you can't operate around the globe or other nations are going to be worse hit than we are. But they're just not there yet. They really have to deal with just the problem that we have before they try to encourage domestic production.
Henry, who do they blame? All these furious and deservedly furious small business people. Do they blame the president? Should they blame the House? I mean, who do we blame, or is it just a Washington that's tone deaf?
Well, I think that what we've seen is a clear need from everyone at the same time. And so I would place blame on the people who are trying to prioritize payments. If you think that the PPP needs funding, fantastic. So do hospitals, so do states, so do schools. They all need the money. And the people who are trying to rank them and say, okay, you get money first, in my opinion, are the ones who deserve the blame. You should just provide at least, classic investment advice, certainty.
Henrietta, great to get your thoughts as always. Brilliant to catch up with you. Henrietta Trades there, Veda Partners Director of Economic Policy. Tom, you can see how there's going to be so much tension on the horizon in Washington. I actually think they've done a really decent job over the last couple of months to put that tension to one side, to get things done. Secretary Mnuchin, I think, has done a tremendous job working with Democrats to put this stuff together. But you can just see on several fronts where the division is going to be in the months ahead.
Well, the division's there, and, of course, it's all colored by the election. And, of course, we've got we're not framing August or into the autumn yet on this terrible pandemic. But, John, it's all political. It's the same thing in the United Kingdom, same thing everywhere. You wonder how these people will adapt in real time. I will take your point, John. I was really taken by how Secretary Mnuchin early in the administration was very closed, very distant, and he has just rallied from the get-go on this pandemic. Whatever anybody thinks about the politics, he's just rallied. There's no other way to put it.
Really stepped up in an important moment, perhaps a little bit late, arguably, but finally got there in the end. Lisa, on trade, on immigration, I think that's the story, not for the here and now. We've got to put out the fire in front of us. But in the months ahead going into the election, you can see how immigration, China, trade, supply chains are going to be massive issues for November.
They already are. And I think that some people saying pull the supply chains back here, but can they afford to do so?
Big story ahead for us, 35 minutes away. Initial jobless claims in America.
America, your children have an amazing superpower. They can help save lives by not having play dates. That's right. By replacing get-togethers with virtual play dates and video chats, they can help slow the evil spread of germs. And if your superheroes do go outside, make sure they continue their superhero wing by staying 6 feet away from others to protect everyone in America land. Find out more at coronavirus.gov. A message from the CDC and the Ad Council.
In case you didn't know, TuneIn lets you listen to the same radio stations you pick up on your home or car radio, except you can hear them from anywhere. If you want to find a station from somewhere else in the world, navigate to the By Location section under Browse. Keep exploring with TuneIn.
The 2020 NFL Draft is on TuneIn.
With the New York Jets, that's going to be the hot spot for this draft early on, right? We're going to see if a team's going to try and get up into that spot and see if they want to...
Tonight at 8 p.m. Eastern, TuneIn has you covered with live coverage, discussions, and analysis of every round one selection.
Oliver is the only guy in this draft that has Aaron Donald potential. Who's going to get up and take it?
Be there when the future stars of the NFL find their home, and when your team selects the players that will shape their future for seasons to come. Search NFL Draft to listen. TuneIn makes it easy to be a part of the conversation. Just make sure push notifications are enabled to hear about breaking news and trending topics from around the sports world. You'll also get custom recommendations of podcasts and radio stations covering the sports and teams you care about.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
Looking to freshen up your listening on TuneIn? Head to the homepage to discover something new. There you'll see custom recommendations based on your listening habits, along with new episodes of shows you've enjoyed in the past. Uncover your next audio obsession on the homepage.
Hit the court anytime with these great NBA podcasts on TuneIn. The Low Post.
So what struck you about this potential head-to-head matchup? What did we learn now that Zion is involved and LeBron and Zion go at each other for the first time?
You know, I still think both teams have to figure out kind of who are their guys when they get into a fourth quarter. I think you saw that with both of them. There were some kind of odd moments.
The Ringer NBA Show.
Who ended up winning the thing. But I did watch for a little bit when it was DeAndre Ayton and Zach LaVine playing against each other. And then as the days went on, Devin Booker was involved. Tell me you've seen the clip of Devin Booker when I can't remember who his opponent was.
Or the Haber Show.
At the end, it's because I worked in the NBA in a front office, and when I was 14 years old, my family moved back from Sudan to America. I went to high school here in New York
Find these
City.
and more NBA podcasts right here on TuneIn.
Hey, y'all, we're taking the Marty Party to a whole new level with the Marty Smith's America podcast with Gerald McCoy.
I truly believe that Carolina made a mistake letting Cam go. This is not a personal shot at Teddy Bridgewater. This could have been Andy Dalton. This could have been whoever they brought in. Cam has so much left. Somebody's really getting a great one, man. And I don't think people really understand what they're getting.
Search Marty Smith America to listen.
trade war.
You benefit if you're just further away from China.
So that you can too.
What are the ramifications if she crumbles or doesn't crumble?
Bloomberg Radio, the Bloomberg Business, Radio.com, and iHeartRadio apps, and BloombergRadio.com. Bloomberg, the world is listening. From the financial capital of the world, 24 hours a day at Bloomberg.com, on the Bloomberg Business app, and on Quick Take by Bloomberg. This is Bloomberg Radio. This is Bloomberg Surveillance Economics.
We are being taken out of our comfort zone by the coronavirus.
Dollar weakness is pretty much a good thing for a lot of the rest of the world.
Finance.
We are going to see a global demand contraction this year, most likely, for oil. The financial health of the business sector has deteriorated somewhat.
Investment.
Obviously, the value in high-vol stocks are going to continue to suffer.
It looks as though the bond market is talking itself into a recession here.
Bloomberg Surveillance with Tom Keene, Jonathan Farrell, and Lisa Abramowitz on Bloomberg Radio.
Good morning, everyone. John Farrell, Lisa Abramowitz, and Tom Keene. This is Bloomberg Surveillance Coast to Coast. Good morning from your homes. We welcome all of you listening to us on all of our digital products on Sirius XM Channel 119 in Boston, in Washington, New York, and good early morning in California. An extraordinary moment here. We're getting some better news on the pandemic, but still real challenges out there on the medical front. And, of course, for this great country, there is an economic contraction. John Framing, Carl Riccadonna, 15% unemployment off of claims that he estimates are 8 out of 100 Americans, 8.2% of Americans on claims now. And his number is actually a little grimmer than consensus coming up here in 29 minutes.
Consensus right now, 4.5 million. That's the median estimate, 4.5 million extra initial jobless claims. It took 4 weeks to destroy what it took 10 years to build, Tom.
Yeah,
I think we've got to think about that. We've really got to think about that when we start to come out the other side.
Lisa, the dynamics here are state by state. This data matters, folks, in 29 minutes because it's so granular and so physical. You have to show up to get the claim. And Lisa, we're almost moving now from we can't process the claims fast enough to the state by state dynamics.
The question I have is, are we going to see a reacceleration of the claims numbers? Bloomberg Intelligence expecting a higher number than the 4.5 million estimate. And really the question is, is this a processing issue? Is the number consistently horrible as it has been 3 weeks ago based on the fact that finally these claims are actually just getting processed, Tom?
Well, they're just getting through. And, of course, Pennsylvania is always a benchmark here, folks. And the dynamics there have been most distressing. But truly, it's state by state. So that's the economic framework. We're going to set that up through this half hour as we go. But right now, we'd like to digress over to the equity market. John, Lisa, and I all looked at our 101Ks and said, let's get somebody on who can give us confidence forward. Savita Subramanian advises for the Bank of America, where she's head of equity and quantitative strategy as well. Savita, what is the quantitative observation right now? What is the mathiness right now you're focused on?
Yeah, no, it's a great question. So I think there's a couple of things going on. I think from a stock perspective, what we're noticing is that the dispersion of stocks has actually increased to close to record levels. So what this means is that stocks are behaving very, very differently from one another, which suggests that there's increasing alpha to be made or increasing performance money to be made from stock selection rather than just buying or selling the market or buying or selling sectors or broad swaths of companies. So I think this is a different environment from what we've been in for the bulk of this bull market, where stocks have been very correlated and have behaved very similarly. So I think that's one trend that's very different. And then I think the second thing that's worth pointing out is that for equity investors, time is actually the best arbitrage opportunity. And what I mean is if you just extend your time horizon on U.S. equities, there's a very unique characteristic of stocks where, if you look at 10-year returns of U.S. stocks, they have very rarely been negative, less than 4% of the time, which compares very favorably to commodities, which, commodities returns have been negative 40% of the time over 10-year periods. So I think that the key here is pick stocks and extend one's time horizon, because obviously we're in a rough patch right now.
Okay, let's say I do that. I extend the time horizon, and then I ask you a pretty basic question. Do I need to pay attention to earnings season?
important in the short term. And again, I think that's what's driving the dispersion between stocks is that we're seeing, even within consumer staples, some companies are doing better than others depending on what their retail channels are. If you sell outside of the grocery store, you're not doing as well. If you sell in a grocery store, you're doing well. So I think that there are definitely, kind of themes that we're seeing across earnings season. But I think that even earnings season is relatively opaque. So very few companies are actually offering forward guidance. In fact, the bulk of companies have just stopped talking about earnings guidance for the year because we are in a little bit of an opaque period in terms of how long this business shutdown lasts. Kind of what the impact is going to be on earnings. So, I think that earnings season is important in terms of picking stocks, but I actually don't see it as giving us much of a guide for how to navigate the next few quarters.
How much is buying stocks here a bet on the Federal Reserve backstopping the market?
Yeah, I personally think that that upside is in the market because we've essentially say they're going to buy almost anything, and they're buying asset classes that they had previously never touched, like high yield bonds. So I think that the good news from the Fed is arguing in the stocks, and they've provided a backstop against a major liquidity meltdown. But from here, I think the real bet that we're making in buying or selling stocks is that the crisis is contained within, let's call it, the first half, and that this is a short, kind of a sharp economic recession with either a V or a reasonable U-shaped recovery. I don't think what's priced in is a W-shaped recovery, if you will, or another onset of COVID-19 later in the year. So I think that would be downside risk. And I also think that the market is actually discounting at this point a relatively aggressive recovery on the economic front. What worries me is that the PE ratio of the S&P 500 is right back up to its February peak levels because earnings have come down, but prices are still relatively high. So I think that that's the risk, is that a lot of the good policy news is likely to be in the market.
Savita, I'm struggling to understand if everybody's looking past earnings and past the horrible and getting worse economic data. Do these jobless claims that we're all focused on matter?
Yeah, I think employment has historically been a lagging indicator. So, and I think that, again, we kind of are forecasting a fairly dire employment scenario. I think our economists are forecasting 10% unemployment by the end of the year. So I think that employment, while it does, kind of point to near-term stresses, doesn't necessarily impact normalized earnings as much. I think what it does show, though, is that there might be a reticence amongst consumers coming out of this to, return to buying big ticket items or even home purchases, right. Given that consumer confidence has seen such an extreme shock.
Savita, how does mid-cap and small-cap resolve itself? Is it through combinations? How do they jumpstart their entrepreneurial, the pulse, the process?
Yeah, it's a great question. I think small caps, I think we will be likely to see consolidations given how cheap small caps are today. Yeah. The sector is trading at below recessionary levels, and the gap between large and small is the widest we've seen in multiple decades. So I think that this is an environment where large companies can buy smaller cap stocks for a song. I think the real risk, though, for smaller companies is whether they survive this downturn, because as you know, smaller companies are much more GDP sensitive. So, large caps have a lot more, kind of staying power. But I think that that's the risk for the overall asset.
Well, are you predicting
how they weather the storm?
Are you predicting a roll-up phase? There was a period, 20 years ago where, we rolled up the specialty chemical industry over 3 cups of coffee on a July weekend. Is that what we're heading for?
I think we could see that. We could see more heavy M&A activity once we get a little bit more clarity on the length of this downturn. But I think that these large and small right now are just hoarding cash. They're not doing anything. They're suspending buybacks. some of them are suspending dividends, and companies seem to be very, very conservative in terms of cash and capital allocation. But I think if we get to a point where there's a little bit more clarity on how long this all lasts and whether there's potential to contain this crisis, that's when you start to see the consolidation. But I would be bullish on an M&A cycle sometime in the next 12 months.
Savita, thank you so much. Savita Subramanian with the Bank of America. With their news in New York City, here's Michael Barr.
Tom, Lisa, John, thank you very much. After encouraging states to begin reopening their economies soon, President Trump seems to be changing his mind, at least when it comes to Georgia. The state's Republican governor is allowing some businesses to open their doors this week. Bloomberg's Martin DeCaro reports.
At the White House daily pandemic briefing, Dr. Anthony Fauci pleaded with Georgia Governor Brian Kemp not to leapfrog into the unknown.
Don't do that. Do it in a measured way.
On Twitter, Kemp responded his move is driven by data and guided by state public health officials.
If I were advising the governor, I would tell him that he should be careful. And I would advise him not to just turn the switch on and go.
A coronavirus model cited by the White House warns Georgia should not reopen until June 19th. In Washington, Martin DeCaro, Bloomberg Radio.
California Governor Gavin Newsom says hospitals in his state will resume scheduled surgeries. He called it the first significant change to the state's stay-at-home order that has been in place for more than a month. The change covers surgeries that are not emergencies. Newsom says examples include procedures for tumors, heart valves, and chronic disease. The change does not include purely cosmetic surgeries. Severe weather has been moving through Mississippi after apparent tornadoes tore through parts of Oklahoma, Texas, and Louisiana. At least 6 people have been killed, including a trailer factory worker whose body was found a quarter mile from his workplace in Marshall County in southern Oklahoma. Global news 24 hours a day, on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Michael Barr. This is Bloomberg. John, Lisa, Tom.
Michael Barr, thank you, sir. Thank you very much. A headline just crossed on a Bloomberg, guys. Another company, Tom, raising capital, Expedia, raising about $3.2 billion of new capital. I'm sure that name resonates with everyone, and I'm sure it's not too difficult to imagine why they need to raise money to get through the next few months.
The money's out there, and there's no question that we're seeing, at a certain price, money appears. There's just no question about that, and I don't see why that ends, John. It just keeps going. Don't
just see it on the corporate side, see it on the sovereign side too, Lisa. Yeah. We had 2 big bond issues from Spain and Italy earlier this week. Record demand on either side. I think about 100 billion euros for both the Italian and the Spanish debt sale. Just unbelievable.
Well, the ECB edifying this bet, basically saying that they're going to accept bonds that fall into high-yield categories after April 7th, right? They're looking to backstop fallen angels the same way the Federal Reserve now is doing so, and this is largely aimed at Italy and providing some backstop to borrowing costs there, and they seem to be doing that.
We don't have the time here, but John, George Saravellis was brilliant at Deutsche Bank today on the urgency of Italy to agree to this fancy EMS funding out of Europe.
The urgency of Europe to agree on anything.
Yes.
I mean, to get the Dutch. I mean, Tom, you and I have caught up with Mr. Rutte of the Netherlands so many times, and we know his position with Italy. And there's a real battle between the core of Europe, from countries like the Netherlands, and the periphery with countries like Italy.
Folks, we should make it clear. We're talking about Mitch McConnell, putting a pause on the button. They don't have a button in Europe right now, do they, John?
No, and at least Mitch McConnell and Nancy Pelosi are getting things done in the House and the Senate. In Europe, we really aren't getting things done as quickly as many people would like at all. Perhaps Italy was just a little bit too ambitious about bringing the continent together to issue some common debt anytime soon. From New York this morning, good morning to you all. You are listening to Bloomberg Surveillance, and we're live on Bloomberg Radio.
Why do hedge funds and other alternative managers rely on Pershing for a highly personalized experience? Mark Alderati, a managing director at BNY Mellon's Pershing and head of Prime Services, explains.
In today's fast-paced environment, where the only constants are change and volatility, you need a prime broker who's both steady and agile, focused on supporting your needs so that you can focus on growing your business and producing results. Exceptional client service and advocating for our clients is at the core of what we do. Our award-winning high high-touch team is just one of the benefits of working with BNY Mellon. We help alternative investment managers create great experiences for their clients. Whether it's customized financing, securities lending solutions, platform access, or outsourced trading, BNY Mellon's Pershing is a prime broker who's committed to this business and dedicated to meeting your evolving demands.
To learn more about the unique and industry-leading solutions for hedge funds and other alternative managers, visit Pershing.com. Pershing LLC. Member FINRA, NYSE, SIPC.
Message and data rates may apply. T&C and privacy terms can be found at babbel.com/terms. Please don't text and drive.
Have you wanted to speak a new language, but you thought it'd be too hard or take too much time? Then try Babbel for free by texting EXPLORE to 64,000. In just 15 minutes a day, you'll be on your way to speaking a new language in just a few weeks. And right now, you can try Babbel for free. Babbel starts out teaching you words and phrases by matching them with pictures. You won't believe how easy the interactive program is. Soon the sentences get a little bigger, and before you know it, you're having simulated conversations voiced by native speakers. And because Babbel is crafted by language experts and uses the spaced repetition method, in just 10 to 15 minutes a day, you'll be speaking the language of your choice with real confidence. With Babbel, you can speak a language. Just text EXPLORE to 64,000 and start your first lesson in the language of your choice for free. Download the Babbel app or text EXPLORE to 64,000 and try it for free. Text EXPLORE to 64,000.
Influential conversation.
I can find and fund my car, from a Mini to a Jaguar.
Feel good car buying from findandfundmycar.com is the place where you can find quality used cars from trusted dealers rated by you, and where you can fund your car with finance to fit your budget. It's feel good car buying all in one place.
Shouldn't be a carry on, choose findandfundmycar.com.
Oh, just there, Dave. Smashing. Great. Really? Night, Steve. Yeah, see ya. Built to take the big knocks. Samsung rugged devices. Easy to use, hard to break. Explore the Samsung Rugged range.
Did you know that players of People's Postcode Lottery have raised over £500 million for charities and good causes? They've also won £47 million in prizes so far this year, and it could be your postcode next. Visit postcodelottery.co.uk/radio before midnight on the 23rd of April to play in the May draws. PPL managed lotteries on behalf of good causes. 16 plus, conditions apply, play responsibly.
It's 24 hours a day at Bloomberg.com, the Bloomberg Business app, and on Quick Take by Bloomberg. This is a Bloomberg Business Flash.
And I'm Karen Moscow. In U.S. stock index futures, little change this morning. We check the markets every 15 minutes throughout the trading day on Bloomberg. S&P futures up 1.5 points. Dow futures down 40. NASDAQ futures up 6. The DAX in Germany's down 0.2%. The 10-year Treasury down 1/32nd, yield 0.62%. The yield on the 2-year 0.21%. NYMEX crude oil is up 17%, up $2.38. It's at $16.16 a barrel now. And COMEX gold is up 0.9% or $14.90. It's $17.53.10 an ounce. The euro 1.0777 against the dollar. British pound 1.2348, and the yen 107.46. We have a few headlines crossing the Bloomberg to bring you. Billionaire Chris Rokos reopens the hedge fund to raise $1 billion. Expedia named Peter Kern CEO, and it's raising about $3.2 billion of new capital. And Union Pacific sees freight volume down 25% this quarter. And that's a Bloomberg Business Flash. Tom, John, and Lisa.
Karen, thank you. Thank you very much. Turning our attention now to Washington, D.C. and the debate over immigration. The President, Donald Trump, signing an executive order just yesterday to temporarily curb the issuing of new green cards for would-be permanent residents in the United States. And Tom, with the labor market heading the way it is, I imagine this is just the beginning.
I would suggest the professionals I speak to on this are absolutely stunned at the action. They don't have a strong opinion about it, the actual what we're going to see the next couple of weeks, but they are stunned by the action here. John Lieber joins us with Eurasia Group to cover the territory here. John, just very simply, on immigration and the president's desire here over 60 days How many American jobs will he protect in that time?
Very few. I mean, I think this is not necessarily about protecting jobs immediately. I think this is more about setting up a dynamic and setting up the immigration issue to create a contrast with Joe Biden for the election in the fall. Immigration is basically shut down in the country. They're not processing visa applications. They're not processing green cards. There's exemptions in here for temporary workers. They didn't cover the H-1B program. I mean, there's just a lot this order doesn't do. And it's only for 60 days. So at the end of those 60 days,
okay,
they got to look at it again and say, are we going to extend this, or is this worth fighting for?
So that's where we are. 61 days out, what would you suggest happens?
I think that they're probably going to extend this. I think that the president, if you look at the groups that typically support immigration restrictions, they've been lukewarm on the president's announcement. But I think the president also has a business constituency to think about, and folks who need these immigrant workers and rely on them, especially in the agricultural sector. But to the extent this is red meat for the political base, you've got to think that they're going to find a way to make this last longer than 60 days and
John,
perhaps extend it to the groups that are already there.
John Lieber, I'm sorry, we're living this every day. They exempted medical workers, agriculture workers, and radio presenters from London. I think it's just great how they did that.
I mean, for full transparency, just so the audience does know, this is a process I'm going through, so I won't be offering a judgment on this particular policy. Just as an observation, though, John, you can see how this is going to be a huge focal point ahead of 2020. A little bit later this morning, we'll have an extra $4.5 million jobless claims, 4.5 million jobless claims, according to the estimate. That would take us to near 25 million in 5 weeks. This is going to be a big debate. And I just wonder, John, from your perspective, because you've got to read the political tea leaves, this is how the president is setting himself up for November. Does he manage to bring the left with him? Do the left come in on this topic, or do they go further the other way?
I think if you look at Joe Biden's immigration plan, it's a lot like Barack Obama's immigration plan, but even more liberal. I think that you've got the possibility of amnesty for workers that are already here, the possibility of more workers coming in under the plan. So I think that where the Democratic Party is certainly far to the left of President Trump. But you're right, this is a sensitive issue, and in times of high unemployment, the issue of immigration is going to be politically charged. So I think the president did this because he understands this is an issue that excites his voters. And, they're fighting over the same voters in a couple of key battleground states in November. So, but where the Democratic Party is not where President Trump is, and they're going to have to oppose this or find some, say therefore some sensible policies that would allow, immigrants to come in where needed or something like that.
John, I was struck as I was researching this issue last night. I was struck by the pushback that President Trump is getting within the further right parts of the Republican Party, basically saying this doesn't go far enough by any stretch of the imagination, that if it is going to be extended, it would have to be increased, and all of the exemptions render it basically toothless. How moderate is this on some levels within the framework of the Republican range of President Trump?
I mean, the reality is that the greatest cure, if you don't like immigration, the best cure for too many immigrants coming to your country is a high unemployment rate, because that's what draws people to this country. So you're going to see immigration numbers drop dramatically throughout the course of this year as the job market collapses. In terms of how moderate or extreme this proposal is, I mean, it's we don't usually ban green card for people, so I'd say it's a fairly extreme, but it's not nearly as far as some of his kind of principled, organized supporters want to see. Which is why I think that going down the road, this all came together pretty fast over the course of 48 hours. You may see this expanded in consultations with business leaders and heavily affected groups, and of course the Trump campaign.
John Lieber, thank you so much with your Raise Your Group today on this important political issue. Just because of time expediency, John, I think we have to swing back to claims. This is the number of the week. It is the litmus paper, if you will, for where is this nation economically. Frankly, it folds into the immigration debate as well. Claims are countable, aren't they?
They are, but to Lisa's point, it's been pretty difficult to understand whether it accurately reflects the pain people are going through right now because of process issues. And processing, there is a belief, Lisa, out there that maybe it has been slowed down, perhaps in California more so. And for that reason, that perhaps 5-6 million a week is the absolute max, but doesn't capture the potential of how high these claims could go.
That's the reason why I'm curious to see how much claims are going to meet expectations or exceed them, as Bloomberg Intelligence expects. Because if we get that 5.5 million claims number, are we basically just looking at an uncountable flood of unemployment that's just hitting up against the processing restraints? And that, to me, is a really key question.
Do we all agree that the sum here from experts is 30 million is where we're heading? Is that?
Well, I won't offer my opinion on that, Tom, but given the direction of travel we're going through right now, sure. You also have to understand that it's very, very difficult to gauge week to week where this is. Just to give you a decent read on that, 3 million is the low estimate out of this claims print, and almost 6 million is the high. That is a pretty large spread. Just think about that. What we were doing on claims before all of this, 200,000, 250,000.
Oh, my, we're up to 218,000.
Now we're talking about a 3 million spread between the low and the high estimate.
Yeah, well said.
I think it goes to the lack of understanding of what we're up against. I mean, if you think about a company like Hertz, rental cars, that seemed fairly solvent earlier this year, within the span of less than 2 months, now looks like it's on the brink of bankruptcy if you look at bond prices. I mean, it just shows the reversal in fortunes, how quickly and how unexpected. How do you model that?
In a big way. Carl Riccadonna of Bloomberg Economics just writing into me saying that there is a case where people are getting rejected, then reapplying, so potentially double counting claims as well. Got to catch up with Carl later this week on some of these issues. The claims number up next in the United States of America. This is Bloomberg Radio.
Vatsal Shah is Senior Project Engineer at Mott MacDonald, a global engineering consultancy with more than 16,000 employees. He earned his PhD at New Jersey Institute of Technology, and as an adjunct professor is helping NJIT students explore emerging technologies.
My focus is renewable markets, emerging technologies, the idea of floating cities. What are we doing to develop that? What will happen to the city on the water? Well, you're going to have waves hitting it. You're going to have solar. How are you going to develop plants? How are you going to develop vegetation and farming? That sort of thought process happens at NJIT. We actually plan out what will the city look like. How do we develop that? So in 10 years, we're actually ready to take on those challenges when we have our first development in the water. NJIT also has been doing a lot of work in self-healing materials, so taking the polymers and the new material that we have in our material sciences departments and putting them into things like concrete, things like steel, reinforcing our soil.
NJIT, New Jersey Institute of Technology. Learn more at njit.edu.
Not completing high school is more of a social thing than it was an academic thing. I came out in the 11th grade. Nobody was embracing you. The kids were cruel. It was very difficult to be gay. Even though all these years have passed, I still had that longing to have my diploma.
The hard part was determining that I was going to do it, but I definitely didn't do it alone.
At age 30, with the help of her mentor, Carissa finished her high school diploma.
I have a mentor, Maria. She convinced me to continue my education and to finish what I started to get my diploma. Just never judges. She's a true role model. If you're even considering getting your high school diploma, go get it. You can do it.
No one gets a diploma alone. If you're thinking of finishing your high school diploma, you have help. Find free adult education classes near you at finishyourdiploma.org. That's finishyourdiploma.org. Brought to you by the Dollar General Literacy Foundation and the Ad Council.
This is... Okay, people, I've got the daily checklist. Who today has ignored a call on purpose? Tick. Talked yourself out of a workout? Tick. Spent far too long scrolling on your phone? Tick. Here's another for your list. BritBox. Streaming the BBC, ITV, Channel 5, and now Channel 4. All in one place and ad-free. So add BritBox to your list and get a 30-day free trial of the biggest box of British box sets. Search BritBox free trial. Tick. Biggest compared to other SVOD providers. Auto renews at $5.99 a month unless cancelled. T's and C's apply.
This is a message from the government. Coronavirus is a national emergency. Life-threatening for people of all ages everywhere in the UK. To help save lives, stay home. Only go outside for food, health reasons, daily exercise, or to work. But only if you cannot work from home. Stay home. Anyone can get it, and anyone can spread it. Coronavirus. Stay home. Protect the NHS. Save lives.
We've never been further apart, yet somehow never closer. At Barclays, we think it's important to celebrate the people making a difference and help support those affected during these extraordinary times. That's why we're supporting the Big Night In appeal. We've kickstarted our donation with £1 million, and if you're a Barclays customer, we'll match your donation pound for pound, up to a total of another £1 million. So if you can, please join Barclays and donate at barclays.co.uk. All donations will be split between the registered charities.
To help make the most of your time at home, tune in to sharing our top activities for social distancing. Tip number 5, cooking something. We all get stuck in a culinary rut with our normal routine. Shake things up in the kitchen by trying an ambitious new recipe or an over-the-top dessert. If cooking really isn't your thing, you can always support your local restaurants by ordering out. For more indoor inspiration, search Listen from Home on TuneIn.
Live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119 and around the globe. The Bloomberg Business app and BloombergRadio.com. This is Bloomberg Surveillance.
From New York City, this is Bloomberg Surveillance for our audience worldwide. We're live on Bloomberg Radio. Let's get to the economic data. Here is Vinny Dajudais.
Okay, Jonathan, another horrible number on jobless claims, 4.4.
I think we got some problems with Vinny's sound there. Vinny, I'm just going to jump in, sir. I'm sorry. Vinny Dajudais there on the latest data. It comes in at 4.4 million, guys. 4.427. The median estimate, of course, was 4.5. So in and around what was expected on Wall Street, if the median estimate is anything to go on. But the spread of the estimates was massive. Revised figure for the previous month, it comes down just a little bit, but it's still an ugly number in and around 5.2 million. The price action in the equity market going into this, futures elevated by 8 points, a third of 1%. In the bond market, we look a little something like this. Yields unchanged at 62 basis points on a 10-year in foreign exchange for the US dollar. The euro weaker, euro dollar coming in 1/3 of 1%. The price action for me is just a side story. Let's put it to one side and focus on the data. We're talking about 26 million initial jobless claims in just 5 weeks, Tom.
Yeah, I do that, John. I think the 4-week moving average is what I've always looked at, and to take it even more in this crisis, you add them up. You take 5 million plus 5 million plus 4 million, whatever that number is, and you get out there on 150 million or so employed in America. Half the population is a guideline. That's how you do the math, John. You take 20 million and divide it by 155, and that gives you an indication of what we may see May 8th.
And how difficult it will be, Lisa, to recover from the damage that's been done in just a really, really short period of time.
I think it's important to note these jobs are not just people who are the checkout clerks. Not that those are incredibly important jobs, but they span incomes that go fairly high as well. This isn't necessarily the lowest rung of workers on an income level getting wiped out. It certainly is that. You're also seeing the middle class really threatened, as well as the high end. And I think that this is an important note. This is not something that has discretion. It is a very broad-based swath of job losses.
I totally agree. And John, wouldn't you suggest that at first we had a lot of lower wage jobs, and now the broad part of America across a middle class is really showing up in these statistics?
No, I think we need to reflect on the real tragedy of this, is that many of the low-paid jobs are the people still out there working, Tom, in the shops, in the storefront, doing the things that people say are now essential, that they weren't paid the essential wage that I'm sure people would pay for right now. Let's be clear about that. They're not at home on jobless claims. They're in the store doing the food shopping, handing over the food items with everyone sitting there in their masks. This is a really difficult time for the people working in those stores.
You see that. All you need to do here in New York is stand out of the line waiting to get in on the quota into the local grocery store. Frances Donald is the Manulife. She's looking at all these cross currents of the American economy. Frances, how do you extrapolate the weeks of claims over to what we will witness in the unemployment reports of May 8th?
Well, my first reaction when I see that jobless claims are decelerating is, oh, that's good news. This means the worst of the economic shock occurred at the end of March and the early of April, and now we don't have to worry about how extensive each subsequent week will be. But then you take a step back, and if you look at over the past 5 weeks, 26 million jobless claims. And why this is so difficult to analyze from an economist standpoint is that it occurred in the space of 5 weeks. We have never seen an employment shock as sharp and large as what we're experiencing right now. And while it's all good and fine to say, yes, but we're compressing what would typically happen over 11, 12 months into a 1 month period, what concerns me most and what's so difficult to model is the confidence shock that comes with 26 million people having to file for initial jobless claims, and how long the hangover from this type of very pronounced, difficult, tragic type of shock weighs on the economy. You cannot press a button and make people feel confident about their future. You can open a store, you can open a manufacturing plant, but this is psychological damage that we're witnessing now. It's tragic, it's difficult to analyze, and it probably means we're not coming out of this as quickly as a lot of our data might suggest.
Yeah, this is the V-shaped happy talk, Francis, that I think drives me mental and others as well. Let's say you open the economy up tomorrow. The activity doesn't return just as quickly as you reopen the economy. People are going to have really low confidence. I imagine we're going to have a much higher savings rate coming out of this as well. These are all the kind of dynamics that we're really struggling to get our hands around coming out the other side. Francis, I imagine you agree with this, because from the tone of your voice, the idea of having a V-shaped recovery after a huge plunge like the one we've had in 5 weeks, I find difficult to believe.
Yeah, I have a bad habit of agreeing with you, John, that's sure. What I'm struggling with here is when we watch economies that are beginning to reopen, those that give us roadmaps, and the best is probably China. And I know that we can't compare China to developed markets one for one. It's not oranges to oranges, apples to apples. But what we see is that we open the economy and people go back to work because they're told to go back to work. We see traffic activity that is 80 to 90% what it was pre-COVID. But when you look on the weekends and when you look at services-based activity, those numbers are still very depressed. And what that says to me is even in an economy where maybe governments have a little more direction over everybody's day-to-day actions, we can get people to go to their jobs, but we can't get them to go and actually engage in the services. So when people ask me, what do you see, V-shaped economy, U-shaped economy, W-shaped economy, my sense is think more about sectors, because manufacturing, absolutely, we could see a V-shape. You can put things out on a conveyor belt very easily. But services, that's going to be a long slog. That's going to be something that looks more like a U or an L, depending on what your timeline is. And you're right. Even if people are out of work for 1 month, 2 months, 3 months, that is going to have financial damage on them. We're going to see higher savings rates. We're going to see higher debt levels. That's going to take a while to clear out of this system. So from my point of view, we're not really looking at a general recovery until the fourth quarter of this year. And even then, I feel like I'm telling myself I'm too optimistic.
Fourth quarter of this year, John Farrow noted this earlier, that it took 1 month to wipe out 10 years of job gains. People arguing that this time is different just because these jobs are getting forced out of the market. The economy was doing okay coming into this, and things will reboot on the other side. Could we see another 10 years before we get back to the same levels that we saw in January?
I don't think we're at 10 years, but we have to consider two elements. One is that historically it takes 5 times as long to recoup the economic damage that occurs in one fell swoop. So typically we see recessions occur, the drawdown in about 11 to 12 months, and about 50 months for us to get back to the peak. So even if I apply that type of logic, let's say we talk about 2 months of drawdown, we're still looking at 10 months to recoup. But where this gets more challenging is that we've tried to put our economy in hibernation. We've tried to say, let's just press pause, and then we'll press unpause on the other side. But while we're on pause, just as John Farrow mentioned, we are going to see savings rates go higher. We're going to see debt levels, but we're probably also going to see defaults. We're probably also going to see businesses that don't reopen, and we're probably going to see structural changes in our economy that make this other side of COVID look very different as well. So we're not going back to normal. We're going back to a new normal. Trying to measure this peak to trough, trough to peak, it's just not appropriate in this type of situation.
Then with that said, what is your call on disinflation? I would suggest the inflation worries have drifted away in the last 10 days.
Oh, I feel pretty confident we have disinflation for 2 to 3 months here at least. We're going to see negative inflation prints across the entire world. Oil is making it really easy to call that. Output gaps are going to be blowing out for extended period of time. So the big problem for central banks is not why are we at 1.5% inflation, but oh boy, how do we prevent negative inflation? But the challenge is, and if you're trading inflation in any sense here, is getting your timelines right, because we also have wartime level fiscal stimulus that has come through. And when you see these levels of fiscal stimulus, when you see the Peterson Institute telling us that fiscal multipliers could be as high as 4, then you better start thinking about how inflation creeps back in over longer term horizons. How do you trade that? I'm not sure it's steepeners, because you're still going to have demand for U.S. yields across the whole way. It's probably something like other inflation hedges, like gold. That's probably a better way to approach this.
Francis, always appreciate your time, especially on a morning like this morning. Francis Donald of Manulife there, the data in America. Look, I've said it repeatedly over the last several weeks. Stocks, by their very nature, are an anticipatory asset class. They are hoping for a better future. But that doesn't mean you ignore the fact that we've had 26 million jobless claims in the space of 5 weeks. And I think that if you are going to anticipate a better future, you need to ask yourself, how much better can it be, and how quickly can we recover after 5 weeks of damage, this kind of damage that has undone so much over so long?
And what's so important is Lisa, you get out to another 4 million or maybe 3 million over 14 days out. All of a sudden, you're at that round number 30 million, which I think is a really psychologically important number. It's like, Dow 10,000. To me, Lisa, that's a massive indicator when we get there early May, maybe the first week of May.
Well, here's what I'm struggling with. This is not just a U.S. situation. This is global, and the claims out of Europe are just as catastrophic. And the question is, how do you sort of model out the compounding effect of just massive job losses around the world? How do you claw out from that? Are the government programs enough to bail out the millions and millions of people who just had their safety net withdrawn from them in one fell swoop, unpredictably, with not necessarily the savings left? I'm struggling to understand that dynamic right now.
Quite simply, we just don't know. There is way too much uncertainty. Let's take the opportunity now to take a quick break and get you some news, some headlines worldwide. We'll do that with Michael Barr.
Thank you very much, John. Lisa, Tom, President Trump says states should follow the slow reopening guidelines so they can stop new coronavirus outbreaks, despite states like Georgia saying they'll restart opening businesses as early as tomorrow. Infectious disease expert Dr. Anthony Fauci insists that's not a good idea.
The one way not to reopen the economy is to have a rebound that we can't take care of. So please, again, let me just close by pleading with the American public in general and those who are responsible leaders to carefully consider how we get back to normal.
Clinical trials began today for a potential vaccine in the UK for the coronavirus as scientists try to find a cure for COVID-19. Dr. Eric Fielding from the Harvard School of Public Health says we're not likely to find a cure before a potential second wave.
I definitely think that in the fall, next winter, there will be a definitely resurgence because by then we will not have a vaccine ready yet for mass use, but we will have drugs by the fall.
Texas said clinics can once again offer all legal abortion services so long as they stick to their promise not to accept publicly provided medical masks, gloves, and gowns for the duration of the coronavirus crisis. It comes after the governor issued new public health orders. 2 Missouri counties are seeing major spikes in coronavirus cases that may be linked to local meat packing plants. It comes as at least 7 major U.S. meat facilities have come to a halt in the space of a few weeks. There are concerns now over meat shortages. Global news 24 hours a day on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Michael Barr. This is Bloomberg. John, Lisa, Tom.
Michael Barr, thank you, sir. Thank you very much. This Thursday morning, here's your price action. Up 8 points on the S&P 500, positive 1/3% in the bond market. Treasury yields unchanged here. 0.62% is your yield on a US 10-year. Here's a quote from Citigroup's Robert Buckland to me just yesterday. This is what he had to say, Tom. We're not out of the woods on this one yet. We'll have a period now, potentially in the next month or two, where the focus will come back on just how devastating this is for the global corporate sector. Right now, the focus just isn't there.
Yeah, we're still in the pandemic watch, and some of the numbers of the pandemic have been up and some have been down over the last 24 hours. But I do take your point, John, that on a corporate basis, it's triage now, and there'll be a real assessment when we start really talking about predictions of June. And I don't hear anybody, John, talking July.
The opening bell, 47 minutes away. Full coverage right here on Bloomberg Surveillance, live on Bloomberg Radio.
This is your Bloomberg Real Estate Report. I'm Denise Pellegrini. Even if you have a great job, a steady income, and a fantastic credit score, you might have trouble getting a mortgage right now.
This is a surprise to borrowers who are, the wealthy in many ways are used to getting what they want.
Prashant Gopal is reporter for Bloomberg News.
It used to be that these were the prized borrowers because the margins were big for the lenders and they were the least likely to default. Now they're among the most risky.
And Gopal says the COVID-19 pandemic has lenders cautious right now.
The wealthiest borrowers tend to get larger loans. Typically they're called jumbo loans because of their size. And those loans, none of them are really backed by the government. So for lenders, they're riskier when borrowers stop paying. The other issue is that because they're bigger, the potential losses are greater.
And that is your Bloomberg Real Estate Report. I'm Denise Pellegrini.
Asset managers who seize change to launch new strategies, add distribution channels, or exploit new technology to re-engineer the investor experience are often rewarded. However, in an industry paralyzed with complexity, few act with agility or decisively. Few run their business strategically. Yet, the most competitive managers in the market know with the right partner and a flexible operating platform, you can. Go boldly toward change with SEI Investment Manager Services.
I'm Steve Meyer, president of SEI's Investment Manager Services. At SEI, we understand the emerging forces that will define success for asset managers and what firms will need to compete tomorrow. That's why we continually optimize SEI's global operating platform. If your business requires greater agility, our advanced technology, integrated best-in-class systems, and multi-asset expertise can be your catalyst for business transformation.
With SEI Investment Manager Services, you lead the charge in a competitive marketplace. Learn more at SEIC.com/seize change.
Connecting decision makers to a net.
Okay, people, I've got the daily checklist. Who today has eaten dinner for breakfast? Tick. Started a chore you'll never finish? Tick. Done a conference call in your pajamas? Tick. Here's another for your list. BritBox. Streaming the BBC, ITV, Channel 5, and now Channel 4. All in one place and ad-free. So add BritBox to your list and get a 30-day free trial of the biggest box of British box sets. Search BritBox free trial. Tick. Biggest compared to other SVOD providers. Auto-renews at $5.99 a month unless cancelled. T's and C's apply.
We're all having to get used to the new normal. And at Birkbeck University, we're experts at being adaptable. As London's evening university, we've been flexing around the lives of busy commuters for nearly 200 years. And you can find everything you need to secure your place for autumn online. From expert advice to virtual tours, a live chat with our students and course applications. Make the new normal, studying for the career that you really want. Search Birkbeck, and it's new problem solved.
This is a message from the government. Coronavirus is a national emergency, life-threatening for people of all ages everywhere in the UK. To help save lives, stay home. Only go outside for food, health reasons, daily exercise, or to work, but only if you cannot work from home. Stay home. Anyone can get it, and anyone can spread it. Coronavirus. Stay home, protect the NHS, save lives.
Today at Bloomberg.com, the Bloomberg Business app, and on Quick Take by Bloomberg. This is a Bloomberg Business Flash.
And I'm Karen Moscow, and more than 4 million Americans applied for unemployment benefits last week, bringing the 5-week total to 26.5 million in the steepest downturn for the U.S. labor market since the Great Depression. S&P futures higher up 14 points, Dow futures up 72, NASDAQ futures up 46, 10-year Treasury little change, yield 0.62%, and NYMEX crude oil is up 20.5%, up $2.87 at $16.64 a barrel. And that's a Bloomberg Business Flash. It is 8:48 on Wall Street.
Bloomberg Opinion, informed perspectives, and expert data-driven commentary on breaking news.
Good morning. morning, everyone. Lisa Brownwitz and Tom Keene, we thank all of you for being with us. Bloomberg surveillance is after a jobs claims report. Again, we go to May 8th, not May 1. May 8th will be the jobs report this time around. Right now, the former president of the Minneapolis Fed at Rochester, Narayana Kocherlakota, joins us. Professor, I want to go right away to the mathiness of your work. And that is that so much of our belief and research is based on smooth curves, on glide paths, on models that are comfortable and at times some would even say elegant or beautiful. We've just had the mother of all jump conditions, exogenous shocks. How does that change your belief in models?
Hi, Tom. Thanks for having me on. I think models are still very useful for trying to organize your thinking about what your likely appropriate response is to economic conditions. You know, obviously, this was an event that was not forecast by economists, but now once we're in the event, I think that modeling and can help you with framing how to think about what should be done, and I think it's been helpful for my former colleagues in the Federal Reserve as they try to figure out what to do next.
One thing that they have done is be incredibly aggressive, and for the most part, people have cheered them. American confidence in the Fed's leadership right now is at the highest since a Greenspan era, if you take a look at the latest Gallup poll. I'm wondering, though, going forward about the politicization of the Federal Reserve based on some of the fiscal stimulus type of efforts they've been doing. What's your expectation?
Yeah, I think that's a great question, Lisa. I think that what we've seen in this recession, I'm going to call it that because I think that's what we're in, is that there's been a lot of coordination between Treasury and the Fed, and implicit coordination between Congress and the Fed. So, for example, the Fed has set up a facility whereby they're going to be willing to lend directly to corporations. That's basically they're using their ability to create government liabilities, money, in order to finance a fiscal intervention by Congress. I suspect we're going to see a lot more of that as we go forward. It's clear that the American public is comfortable with this. It's clear that Congress is comfortable with it. It's clear the Fed is comfortable with it. What that's going to mean, I think, in terms of politicization, I think that's a good question. I worry about that, certainly.
How do we get the genie back in the bottle? We asked Vice Chairman Clarida this question, and many others have been asked the same question. Down there, out there somewhere, do you just let the debt run out? Or do you find a way to actually do what many would say is responsible and just pull it in a little bit?
I think that it's very difficult to put the genie back in the bottle unless people perceive a cost to having all this debt. As long as interest rates remain low, as long as inflation remains low, I think that you're going to see Congress and the Fed continue to feel comfortable with these kinds of expansionary programs.
Professor, you could argue that if the Fed's balance sheet gets to $12 trillion in the near term, which isn't a crazy estimate, that it won't matter if borrowing costs remain low, to your point, and if everything just keeps chugging along, that they'll look like the heroes. So why would they become a more political body at that point?
Oh, I think the issue is that what is the role of the Fed in terms of fighting recessions? The traditional role for the Fed is simply, if recession comes along, we're going to cut interest rates. If we see inflation on the horizon, we raise interest rates. That's a pretty simple technocratic position. Now I think the Fed is in the business of, okay, which kind of program should we be financing for Congress? Well, that's a much more political kind of job. And I think the issue is whether or not we want a group of, as Americans, do we want a group of unelected technocrats to have that power? As you say, right now they're the heroes, but I think that this is creates risk for the institution going down the road. Certainly,
I wanted to go there. This is so important, Professor Kocherlakota. Is the risk to the institution. What is your action plan for Chairman Powell now as a former member of the institution to maintain the integrity of the Fed? What does he need? Does he need to get out of the speaking circuit, or does he need to, do the Today Show? What's his best practice?
Well, I don't think I need to give any advice to Chair Powell about how to handle publicity. He's done a fantastic job, I think, in terms of communicating about what the Fed is doing, why it's doing it. I think that's one of the most striking differences I see between where the Fed is today as opposed to where it was in 2008, where it was also doing, I think, things to save the U.S. economy, but not communicating as effectively as Powell has done. No, I think it's really this question that you asked about how do you get the genie back in the bottle. You can't do it in May of 2020, but I think there has to be some thinking. What are our guidelines for using 13.3 going forward? This clause in the Federal Reserve Act that seems to say, well, the Fed can do anything it wants to as long as the Treasury Secretary signs on.
Yeah. This has been wonderful. Professor, thank you so much. Narayana Kocherlakota, folks, the former president of the Minneapolis Fed and now at the University of Rochester. I was listening there, Lisa, and what I found so important was bringing it over from a full faith and credit analysis to the credit markets, because the complacency out there for me right now in this economic contraction in the credit markets is maybe more interesting than the stock market.
Yeah, although a lot of that is backstopped by the Federal Reserve and the prospect of their buying below investment grade credit. I got to say, Tom, I'm feeling really uneasy this morning. I really am struck by something that Francis Donald. That's part of it. But I will say that Francis Donald saying that we're not pricing in a W-shaped recession, the idea of a resurgence in the virus later this year. And if you look at the science, I just am not necessarily seeing confirmation that that's not going to be the case. And I'm just feeling this growing sense of unease.
It's amazing. You bring this up. It's on the cover of the FT this morning, and it's certainly in the zeitgeist, Lisa, this idea of the double infection, however you want to define that. And in talking to Johns Hopkins University and other experts on this, the pros talk about this totally differently than we do. They're really, really focused on what these bacterium and viruses do 6 months out. It'll be fascinating to see. We see claims. They were challenging, to say the least. It moves us to the jobs report on May 8th. Stay with us worldwide. This is Bloomberg Surveillance.
Business is constantly evolving.
Okay, people, I've got the daily checklist. Who today has eaten dinner for breakfast? Tick. Started a chore you'll never finish? Tick. Done a conference call in your pajamas? Tick. Here's another for your list. BritBox. Streaming the BBC, ITV, Channel 5, and now Channel 4. All in one place and ad-free. So add BritBox to your list and get a 30-day free trial of the biggest box of British box sets. Search BritBox free trial. Tick. Biggest compared to other SVOD providers. Auto-renews at $5.99 a month unless cancelled. T's and C's apply.
This is a message from the government. Coronavirus is a national emergency, life-threatening for people of all ages everywhere in the UK. To help save lives, stay home. Only go outside for food, health reasons, daily exercise, or to work, but only if you cannot work from home. Stay home. Anyone can get it, and anyone can spread it. Coronavirus. Stay home, protect the NHS, save lives.
Want to know a great way to discover the latest and greatest sports audio on TuneIn? It's easy. Just make sure push notifications are enabled on your phone to receive recommendations of sports talk radio and podcasts, along with important breaking news updates. Get your daily dose of NFL shop talk with these great podcasts on TuneIn. Start your morning off right with Around the NFL.
Injured, depleted roster into the playoffs, and I didn't think they belonged in the playoffs.
I think overall, though, it was a great divisional round weekend because you got the first one.
Run into the end zone with the Move the Sticks podcast.
We had a fun little Zoom cocktail hour last night.
Oh, yeah.
What a star-studded affair. Greg, you were there for the earlier part, but it really popped off a little later on. We had Zach Goldman.
And dive deep into the sidelines with the Peter King podcast.
On the occasion of his 50th birthday, come down and record a little bit of retrospective on the life and times of Brett Lorenzo Favre.
That sounds like a bestseller.
It sounds like a precursor to a funeral. That's what it is.
I wasn't thinking that.
Explore these and more hard-hitting NFL podcasts right here on TuneIn.
Hey, y'all, we're taking the Marty Party to a whole new level with the Marty Smith's America podcast with Gerald McCoy.
I truly believe that Carolina made a mistake, like Gambo. This is not a personal shot at Teddy Bridgewater. This could have been Andy Dalton. This could have been whoever they brought in. Cam has so much left. Somebody's really getting a great one, man. And I don't think people really understand what they're getting.
Search Marty Smith America to listen.
Get your MLB fix with these great podcasts on TuneIn. Fill your seventh inning stretch with the Ringer MLB Show.
I just can't get over it. It's like, Jeter Downs. Didn't realize he was a top. Like, my dad is drinking the Kool-Aid on this. He's like, of course. Mookie was going to leave. I'm like, what do you mean? You don't know that.
Slide into second with the Starting Nine podcast.
Nolan Arenado slides right into the top spot for a favorite baseball player. Active in the league right now. It is a pleasure to be sitting next to you, sir.
Thank you, man. I appreciate it. Thank you.
This is we've been waiting a long time for this. We actually, in terms of like active
Round the Bases with the Statcast podcast.
Ways of going about it. I picked third, so in some ways it made it easier for me. Mike, just to go over the first couple of picks. Mike took Barry Bonds, who I think was kind of the obvious guy to take number one. Not only
catch these and more MLB podcasts right here on TuneIn.
About the losers in a trade war.
You benefit if you're just further away from China.
So that you can too.
What are the ramifications if she crumbles or doesn't crumble?
Bloomberg Radio, the Bloomberg Business, Radio.com, and iHeartRadio apps, and BloombergRadio.com. Bloomberg, the world is listening. From the financial capital of the world, 24 hours a day at Bloomberg.com, on the Bloomberg Business app, and on Quick Take by Bloomberg. This is Bloomberg Radio. This is Bloomberg Surveillance Economics.
Once we get through coronavirus, it's very supportive and very stimulative.
Central banks themselves got caught hostage by markets.
Finance.
OPEC Plus is at war with itself.
We know we can create America's energy independence again.
Investment.
The market's anticipating the rate getting very close to zero in fairly short order.
Volatility is back, so that's going to make for more cautious trading.
Bloomberg Surveillance with Tom Keene and Paul Sweeney on Bloomberg Radio.
Good morning, everyone. Bloomberg Surveillance, Tom Keene and Paul Sweeney. Thank you for being with us today. We welcome all of you coast to coast, around the world as well. Carl Riccadonna will join us here in a moment, and we'll look at claims numbers and the framing out of the great unemployment, of the shock of this pandemic. David Wilson along as well, looking at the individual stock story. Bloomberg Surveillance this morning, as always, brought to you by Cohn Resnick Advisory Assurance Tax. Cohn Resnick, they can help your business mitigate disruption and mobilize for the future. Visit their Coronavirus Resource Center. Do that today. CohnResnick.com/COVID-19. I'm going to spell that out. CohnResnick.com/COVID-19. COVID-19. And we thank Cohn Resnick for their support. Paul, there's this new thing out there now. It's called Fengma. I don't know how to pronounce it. It's Fengma. And we've taken Jim Cramer's Fang stocks. Okay, fine. Yep. And now we've put a gmu on the end, haven't we?
Yeah, exactly. The tech stocks, Tom, just kind of leading us here. You think about Amazon, Netflix, you think about some of the Microsofts of the world here. So with tech stocks, they've always been kind of the leaders of this market coming out of financial crisis, Tom, both on the upside and the downside. And that's still very much the case here as people are looking anywhere for growth in what has been a devastating economic development.
Savita Subramanian was something on that with Bank of America. I think GM on the back of that, folks. Fangama is Google and Microsoft, I'm guessing, as well. With that, and he's the only one I know that can't pronounce Fangama, are David Wilson. David?
Well, I don't call him Fangama. I went with FanMag.
I like that.
A whole lot better.
Oh, that's
FanMag.
That's poetic.
I do what I can. Anyway, what's notable in early trading is that we're seeing some life among travel stocks. Start with the casinos. Las Vegas Sands up 11.5%. The casino owner predicted a mid-year rebound in Asian spending, once China and Singapore lift coronavirus-related limits on travel and gaming. Now, the company's Asian casinos account for about 80% of revenue. You're seeing Las Vegas Sands Piers up as well. Wynn Resorts up 7%. MGM Resorts up 2.5%. Expedia Group also up 2.5%. The online travel company is selling $1.2 billion of preferred stock to the private equity firms Apollo Global and Silver Lake. They'll both be represented on the board, too. And Expedia is lining up $2 billion of debt financing. Now you look at earnings. You've got Eli Lilly up 1%. The drug maker's first quarter revenue beat analyst average estimate in the Bloomberg survey by the most in more than a decade. Earnings also surpassed projections, and Lilly raised the high end of its full-year profit forecast. Union Pacific's up 3.5%. The railroad's earnings unexpectedly rose in the first quarter as revenue beat projections. Union Pacific, though, expects to carry 25% less freight this quarter. So they're certainly seeing the effects of the virus and a related slowdown in the economy going forward. You've got energy stocks higher as crude oil extends a rebound from Monday's plunge below zero. ExxonMobil up 2%. Occidental Petroleum up 3.5%. Also in oil services, Halliburton up 4.5%. And we're also seeing a rebound in the United States Oil Fund ETF. It's up about 6% after plunging for 9 straight days. It's the longest streak since 2018. And over that time, the ETF has tumbled 53% to a record low.
Can I just do a shout out here to one David Wilson? David, you have always outlined the mysteries of these ETFs. I mean, you did this for years and years and years, leading our equity coverage at Bloomberg News. Were you shocked by this whole debacle?
Well, I mean, we've kind of seen it before. You go back a year or two with the
Credit Suisse thing.
ETFs. Some of them really tanked. I mean, the fund basically they've issued all their shares, so they're out of line with the value of the futures contracts they hold. They're shifting the mix of futures to try and deal with what's happening in the oil market.
I thought I was just buying a barrel of oil.
Oil prices aren't helping.
Continue, David.
In any case, Target's down 6.5%. The retailer expects to be less profitable in the fiscal first quarter. Target cited a shift in demand to household items, not so profitable, along with a surge in online sales and higher pay and benefits. Gap's down 5%. The apparel chain said current and projected cash may not be enough to fund operations. And Gap's raising $1 billion with a bond sale. Hershey down 3%. The candy maker's first quarter earnings trailed the average estimate by the most in 5 years. We're seeing earnings-related declines among technology stocks as well. The chip maker Xilinx down 4.5%. The chip equipment maker Lam Research down 2%. The disk drive maker Seagate Technology down 3%. Even Citrix Systems, which provides remote computer access, they had a great first quarter with all these people working at home. Problem is, though, they're looking at a more challenging macroeconomic backdrop in the second half, as they put it, and they figure what they saw last quarter basically will just offset that. Citrix down 4%. And one more for you. Immunomedics up 33.5%. The drug maker won U.S. regulatory approval for a breast cancer treatment more than a month ahead of schedule.
Bloomberg Stocks editor Dave Wilson, thank you for that update in the equity markets here. A little bit of green on the screen here. But, Tom, just another brutal jobless claims number coming out, 4.43 million in the weekend at April 18th. That brings the total jobless claims to 26.5 million over the last 5 weeks since the beginning of the pandemic. Just absolutely extraordinary numbers and very sad indeed, sobering as well. Bloomberg Economics U.S. economist Carl Riccadonna joins us to help put those numbers into context. So, Carl, these numbers are just extraordinary. What do you take away from the jobless claims this week and what is really building to be incredible carnage in the employment market?
Well, Paul, I'm actually going to breathe a little bit of a sigh of relief here because I thought that claims could be moving in the other direction. If we saw a run rate of a little bit over 6 million claims per week in recent weeks at the high water mark, and there was some speculation that maybe that's simply as much as we can process through this antiquated system running on COBOL software and whatnot. And then last week we saw this decline into the 4 million territory But we also knew that we lost a day of processing last week due to the Good Friday holiday. And so maybe that depressed the number and we'd be right back to 6 million today. That didn't happen. In fact, we continued to trend lower. So no doubt about it, 4 million is an absolutely horrendous number. Worst on record, barring the prior 4 or 5 weeks. But we're moving in the right direction that suggests maybe we're starting to see a little bit of a light at the end of the tunnel to this labor dislocation.
So, Carl, are these jobs, all right, let's step back. We have the Bloomberg Economics GDP model. You put in 1 million different inputs. It turns around for a while, and it kicks out your GDP forecast. When you put in jobless claims numbers like this, how do you think the economy is going to try to figure itself out over the next several quarters?
Well, what these jobless claim numbers tell us, and certainly unemployment filings are one of the most important real-time indicators. There's a 1-week lag of what's happening in the real economy. So this gives us tremendous insight into the start of recession, the depth of recessions, and also the turning point in recovery from recession. So jobless claims will be front and center every Thursday for the rest of the year. What this is telling us is the economy is heading into a contraction. We just updated our model this morning of 36.6% annualized on GDP in the second quarter. Wow. That is the worst number on record. The current recession will be about 3 times as large as the peak-to-trough decline we saw during the prior worst recession, which was the Great Recession after the financial crisis.
I mean, Carl, these are important numbers. Take us to the granularity of the claims report. Your team, what do you do on the claims? You look at California. Do you look at a certain state that gives you those dynamics that get you out to the next week's number?
Well, a couple of things. So one, we're looking at which states are lagging in the filing process. And when we look at states like Michigan and Pennsylvania, they show some of the highest claims as a share of workforce numbers. And so we think they probably provide some direction to where other states which have been slower to file claims may be headed, states like New York and New Jersey, for instance.
So, Carl, let's think about the duration here. We're going to have an ugly second quarter, as you just outlined. Is this something we're going to bounce along, in this really tough environment for 2, 3, 4 quarters? Or do you think the fiscal stimulus out there, the actions taken by the Fed, will be enough to kind of make this a steep but relatively short-lived recession?
Sure. Well, we expect it to be the most severe downturn in history. We also expect it to be the shortest downturn in history, coming in at just 2 quarters. Now, if we look at the post-World War II period, the previous shortest recessions were about 3 or 4 quarters. So this will be exceptionally severe, exceptionally short, and that's because the fiscal stimulus that has been put into place is largely adequate to support the lost business and household income over this period. It's not topping things off by any means, but it is importantly providing a very important fill in a very deep vacuum for households and for businesses. Now, that's assuming that the lockdown is roughly a 2-month lockdown. If we're talking about a longer period of lockdown, or we go back into lockdown next winter as the flu season starts, then we're going to need an even bigger fiscal price tag to support the economy.
Great summary. Very important there, folks, from Bloomberg Intelligence. A new economic analysis today showing some true grimness in the American economic experiment. Carl Riccadonna with us this morning. Right now with the news in New York City, here's Michael Barr.
Tom, Paul, thank you very much. The House is reassembling to send President Donald Trump a new bipartisan bill to help businesses crippled by the coronavirus. The nearly $500 billion measure will help replenish a fund to help small and medium-sized businesses with payroll, rent, and other expenses. Supporters are already warning that more money will be needed almost immediately for the business-backed Paycheck Protection Program. A top federal health official says he lost his job as punishment for questioning President Donald Trump's promotion of an anti-malarial drug to treat COVID-19. Bloomberg's Martin DeCarroll reports.
Dr. Rick Bright says the Trump administration put politics and cronyism ahead of science. Bright says he was removed from his post atop the federal agency involved in developing a coronavirus vaccine because he believed President Trump's promotion of hydroxychloroquine was potentially dangerous. The president was asked about Bright's removal.
You just mentioned a name. I never heard of him. When did this happen?
This happened today.
Well, I never heard of him. If the guy says he was pushed out of a job, maybe he was, maybe he wasn't. You'd have to hear the other side. I don't know who he is.
As for hydroxychloroquine, a recent study found patients taking it had higher death rates compared with those who did not. In Washington, Martin DeCaro, Bloomberg Radio.
An outbreak of 26 reported tornadoes left 7 dead and dozens more injured in a trail of destruction across 4 states, Mississippi, Oklahoma, Texas, and Louisiana. There will be no stage, but there will be living room celebrations. The NFL draft goes virtual tonight. Global news 24 hours a day, on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Michael Barr. This is Bloomberg Talk.
Michael Barr, thanks so much. Off the claims report, which is better than the grimness expected, we go flat up to futures up 14, Dow futures up 53. It's a much quieter tape, a real refreshing tape to be this quiet. The VIX 40.25. Yields, well, they were mixed, I'm going to call it. Yields, well, excuse me, yeah, mixed yields today with a curve flattening 40 basis points on the curve. Paul Sweeney and Tom Keene, this is Bloomberg.
Message and data rates may apply. T&C and privacy terms can be found at babbel.com/terms. Please don't text and drive.
Have you wanted to speak a new language, but you thought it'd be too hard or take too much time? Then try Babbel for free by texting EXPLORE to 64,000. In just 15 minutes a day, you'll be on your way to speaking a new language in just a few weeks. And right now, you can try Babbel for free. Babbel starts out teaching you words and phrases by matching them with pictures. You won't believe how easy the interactive program is. Soon the sentences get a little bigger, and before you know it, you're having simulated conversations voiced by native speakers. And because Babbel is crafted by language experts and uses the spaced repetition method, in just 10 to 15 minutes a day, you'll be speaking the language of your choice with real confidence. With Babbel, you can speak a language. Just text EXPLORE to 64,000 and start your first lesson in the language of your choice for free. Download the Babbel app or text EXPLORE to 64,000 and try it for free. Text EXPLORE to 64,000.
Hey y'all, Jeff Foxworthy here. Now, if you've ever found yourself repeating the same thing over and over for 75 years, you might be Smokey Bear.
Only you can prevent wildfires.
That's why I'm filling in for Smokey to switch things up, because there's a lot more to say. And I should know because my grandfather was a firefighter. And one of the things he taught me is that the people that love the outdoors the most are often the ones accidentally starting wildfires, which means always BYOB. No, bring your own bucket to the campfire. And be extra careful with things like burning yard trimmings. Don't just walk away, or chances are you might be starting a wildfire. So for the love of the outdoors, go to SmokeyBear.com to learn more about wildfire prevention. Brought to you by the U.S. Forest Service, your state forester, and the Ad Council.
Influential conversations from Bloomberg.
Dating can be tricky, especially when you can't meet face-to-face. So it's time to get creative. With the easy way to replace physical dates, Video Call from Bumble, the dating app where women make the first move. Here's Anna Williamson and Tom Reed-Wilson with some tips on connecting online.
It's a bit harder to flirt with limited body language, but nothing beats a smile and some eye contact to show them you're interested.
And have an activity plan for your date. This will help break the ice.
Download Bumble today.
Okay, people, I've got the daily checklist. Who today has eaten dinner for breakfast? Tick. Started a chore you'll never finish? Tick. Done a conference call in your pajamas? Tick. Here's another for your list. BritBox. Streaming the BBC, ITV, Channel 5, and now Channel 4. All in one place and ad-free. So add BritBox to your list and get a 30-day free trial of the biggest box of British box sets. Search BritBox free trial. Tick. Biggest compared to other SVOD providers. Auto-renews at $5.99 a month unless cancelled. T's and C's apply.
At Bloomberg.com, the Bloomberg Business app, and on Quick Take by Bloomberg. This is a Bloomberg Business Flash.
And I'm Karen Moscow. U.S. stock index futures are edging higher this morning as investors weigh the latest economic and earnings data to determine the coronavirus's damage to global growth. Crude oil is surging. It's now above $16 a barrel in New York. Contracts on the S&P 500 moved higher after jobless claims surged by 4.4 million last week. That was slightly less than expected. Right now, S&P futures are up 14 points. Dow futures are up 55. NASDAQ futures up 54. The DAX in Germany is up 0.1%. 10-year Treasury down 1/32, yield 0.62%. The yield on the 2-year 0.22%. NYMEX crude oil is up more than 18%, up $2.55 at $16.33 a barrel. COMEX gold is up 0.4% or $6.50 at $17.4480 an ounce. The euro 1.0783 against the dollar. British pound 1.2324, and the yen is at 107.44. And that's a Bloomberg Business Flash. Tom and Paul.
Karen, thanks so much. Paul Sweeney and Tom Keene. We want to continue our discussions now on what we're all experiencing with this pandemic, and just so many, that is the doctors and indeed the nurses on the front lines. I spoke today with Jason Farley. He's at Johns Hopkins University in their Department of Nursing, and the professor is truly expert on infectious diseases. Here is Professor Farley.
Right now, the vaccine studies are looking at what we call phase 1 vaccine studies. These types of studies are really looking at the safety and whether or not we actually see a response. So does the immune system respond to the vaccine? So that's not testing efficacy, meaning is it effective at preventing the virus from occurring if we have the vaccine? So those studies come next. And really importantly, that's why we're continuing to project timelines of at least 12, if not 18 months away.
Dr. Farley, the raging debate this morning is in your wheelhouse. You are one of the nation's experts on Staphylococcus aureus, methicillin, and all the resistancies in hospitals. The arch fear of medical experts is a secondary bout of this virus down the road. Explain the likelihood and how it will demonstrate if we get a virus come September or December or even into 2021.
Yeah, certainly. Well, we're looking at estimates of antibody right now that are emerging that suggest that 5% of the population, for example, the data out of Seattle and the Washington state that suggests that 5% of the population may have been exposed and recovered. So the first question, obviously, is does those antibodies recovered from lead to any form of attenuation or protection in the future? The second question is if that's so, that still leaves 95% of the population who what we would say are immunologically naive, meaning no prior exposure and recovery. So in other words, if we roll back social distancing too fast, we continue to propagate virus in the community. That then subsequently leads us into the season of cold and flu, which is, like you said, September and on, in the United States at least, and in the northern hemisphere, that timeline. Then we also get other respiratory viruses reemerging, such as influenza. And it complicates our scenario, as was mentioned by the CDC Director, Robert Redfield, because then clinicians are seeing a patient with respiratory symptoms and scratching their head saying, well, is this flu? Is this coronavirus? Is this, another problem with that becomes we know how to treat flu. Obviously, we know how to diagnose it. We know how to prevent complications in most circumstances, not all. Yet transmission parameters and dynamics do affect the way we may respond. So, again, we're concerned about co-occurring respiratory viruses in the same season, which will complicate decision-making. And it's not exactly that we don't anticipate coronavirus to return during the fall. We absolutely expect a second wave of infection to occur. We've already seen it around the world in various sites that have reemerged from pandemic.
Jason Farley with Johns Hopkins University, their professor of nursing, just fascinating there on his wheelhouse, infectious disease as well. I look, Paul, at this ongoing data that we do, and as I just sent out, the statistic he mentions there that only 5% of the public appears to have some form of experience with this virus is just frightening.
It really is. I would have thought that number was much higher. but that suggests, as Professor Farley was saying, that a second wave is absolutely likely in his opinion. So, and that's kind of what we've been hearing from a lot of health professionals, and that kind of leads to the importance of kind of what we've heard from New York Governor Andrew Cuomo about the persistence and keeping social distancing, and if we're thinking about reopening society and the economy, it has to be done very judiciously because there is that second wave out there as well as we continue to deal with the first wave.
The first wave, but we don't know what the makeup of the second wave or the waves will be as well, how it'll show itself public, and of course there's a whole issue of virus mutation as well. Let's mutate over to the equity markets, and Paul, I think it's something we were laughing about before with David Wilson, but this concentration in one group of stocks, what's the identifier of that group? If you were, sitting in a taxi cab right now and they go, oh, gee, it's Paul Sweeney, how do you explain what those stocks have that other stocks don't have?
Well, I think it's simply right now, Tom, in the last 5 weeks, the fact that they seem to be relatively to a lot of other sectors in the economy, relatively unfazed by the economic impacts from the pandemic. And you compare them to something like travel and leisure and things like that, which we can identify the direct and negative impacts. When you think about some of these big tech companies, yes, there's going to be impacts. Yes, there's a lot of uncertainty, but their core businesses still remain relatively unfazed by the impacts of the pandemic. Plus, they still just have what I think they've always had, which is on a relative basis to other sectors, some pretty darn good growth rates kind of built into their business.
Yeah, but which growth rate matters? Is the growth rate up the income statement at the revenue line, or is it the growth rate down below?
Yeah, I think it's a top line, Tom. I think a lot of tech investors have always been focusing on that top line revenue growth and, recognizing if it's an Amazon, they can turn on and dial up or dial back the expenses. I think when you take a look like a Netflix, it's all been about subscriber growth, and we saw Netflix just this week put out some amazing subscriber numbers. So I think it's kind of a top-line thing, and recognizing that these are inherently, particularly when you take a look at the cloud businesses, a lot of these companies like Microsoft and Amazon have very, very profitable businesses.
And it's going to be amazing, folks, to see what that phrase organic revenue growth will be for non-techies.
Oh, boy.
A cloud of dust. I mean, then maybe the new 8% is 3%, I guess is what we're looking at there as well. I'm going to migrate over, folks. What's so cool here, folks, is working out of our remote location this morning. I have the Bloomberg terminal on a cell phone, and in many ways it's faster than the famous Bloomberg terminal. It's amazing how you can get around this thing. Futures up 15, Dow futures up 60, the VIX in 2 points, 40.26. Yields today simple, a jumble, near yield 0.62%. What am I watching? How about gold? 17.44 the ounce. Thank you, Dennis Garvin, for being with us earlier today. This is Bloomberg.
25 years ago, NJIT graduate Dick Sweeney co-founded Keurig Green Mountain, a company whose incredible innovations changed the way the world brews a cup of coffee. Today, he lectures widely on business leadership and is a strong advocate for NJIT's work to combine business education with the power of STEM.
NJIT is definitely fostering the innovative thinking for budding entrepreneurs simply because that's the world we live in. NJIT is producing students that have been trained, educated, and given the business acumen to be a contributor to a company. The distinct mission is to develop great STEM scholars. The attributes I've always looked for in team members are heart, smarts, guts, and luck. So we want people with passion, intelligence, courage, and never discount luck. The student coming out of NJIT has experienced all of that.
NJIT, New Jersey Institute of Technology. Learn more at njit.edu.
Asset managers who seize change to launch new strategies, add distribution channels, or exploit new technology to re-engineer the investor experience are often rewarded. However, in an industry paralyzed with complexity, few act with agility or decisively. Few run their businesses strategically, yet the most competitive managers in the market know with the right partner and a flexible operating system, you can. Go boldly toward change with SEI Investment Manager Services.
I'm Steve Meyer, president of SEI's Investment Manager Services. At SEI, we understand the emerging forces that will define success for asset managers and what firms will need to compete tomorrow. That's why we continually optimize SEI's global operating platform. If your business requires greater agility, our advanced technology, integrated best-in-class systems, and multi-asset expertise can be your catalyst for business transformation.
With SEI Investment Manager Services, you lead the charge in a competitive marketplace. Learn more at SEIC.com/C's Change.
This is a Bloomberg Money Minute.
Okay, people, I've got the daily checklist. Who today has eaten dinner for breakfast? Tick. Started a chore you'll never finish? Tick. Done a conference call in your pajamas? Tick. Here's another for your list. BritBox. Streaming the BBC, ITV, Channel 5, and now Channel 4. All in one place and ad-free. So add BritBox to your list and get a 30-day free trial of the biggest box of British box sets. Search BritBox free trial. Tick. Biggest compared to other SVOD providers. Auto renews at $5.99 a month unless cancelled. T's and C's apply.
Thank you.
Thank you.
Thank you.
Thank you.
Thank you.
Thanks to National Lottery players, communities across the country are about to benefit from up to £300 million of funding.
Thank you. Thank you.
Money that will help support the most vulnerable in these exceptional times.
Thank you. Thank you.
Food banks, local health organisations, charities combating loneliness, and thousands of other community causes will all get vital resources.
Thank you. Thank you.
And it's all thanks to you, playing the National Lottery. Your numbers make amazing happen.
This is a message from the government. Coronavirus is a national emergency, life-threatening for people of all ages everywhere in the UK. To help save lives, stay home. Only go outside for food, health reasons, daily exercise, or to work, but only if you cannot work from home. Stay home. Anyone can get it, and anyone can spread it. Coronavirus. Stay home, protect the NHS, save lives.
Broadcasting live from the Bloomberg Interactive Brokers Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119 and around the globe. The Bloomberg Business app and BloombergRadio.com. This is Bloomberg Surveillance.
And good morning, I'm Karen Moscow, along with Tom Keene and Paul Sweeney. And the S&P 500 is higher at the open, up 0.4% or 11 points to 2810. The Dow Jones Industrial Average up 0.3% or 77 points at 23,555. And the Nasdaq is up 0.4% or 31 points at 8527. 10-year Treasury up 230 seconds. The yield 0.61%. The yield on the 2 years 0.21%. NYMEX crude oil up 21%, up $2.92 at $16.69 a barrel. And COMEX gold up 0.4% or $6.80 at $17.45.30 an ounce. The euro 1.0792 against the dollar. The yen is at 107.66. Tom and Paul.
Thanks so much, Karen. Greatly appreciate that. Damien Sassar with us now with Bloomberg Intelligence as we look at EM. The emerging markets, Damien, of Switzerland and Japan are coming in today. We see Euro Swissy, stronger Swiss. We see Euro Yen, decidedly weak Euro, stronger Yen as well. What do they signal to EM? Are they two separate worlds or are they linked?
No, they're all linked. I mean, everything's beta correlated, but you're actually seeing some differentiation, on this move, right? In terms of EM local currency returns, the rally in the stronger hands, I'm talking the rupiah, the ruble, the Chilean peso, the Philippine peso, is decidedly different from the weakness we're seeing in Brazil, Mexico, South Africa, and Turkey. And we know what's going on in those four markets, and the pain is just relentless.
What about the commodity market? I'm sorry, Paul. Paul, no, please. I was just so wound up to talk to Damien. I was rude. Paul, our audience hates when I'm rude. Paul, jump in here and step on me, stepping on you.
Thank you so much, Tom. So, Damien, I know you like to look at value on a relative basis, assessing relative value. Yeah. So when you take a look at EM fixed income, where is the relative value among this market route?
Okay, so basically what's interesting here, what's different, is that the rally's being led by the belly. We've seen, I'm talking U.S. dollar-denominated debt, emerging markets, as well as all spread asset classes. It's being driven by the belly, the 5-year point on the curve. And so what that's doing is it's creating some real divergence across maturity. It's the first time in recent memory that I can remember where it's not being led by long-duration or short-duration moves. It's actually being led by, real credit, people looking for certain credits, and, that might be bigger issuers in different different parts of the market. So what is that doing to me? It's causing this huge divergence between high yield and investment grade EM dollar debt. I mean, right now, if you want yield, if you want carry, look no further than EM high yield, because it is the highest yielding asset class in global fixed income, Paul.
All right, so if I want to go out there and get that yield, give me a sense of what the risk is I am taking on a historic basis. Am I just crazy if I were to go out there and look for some EM high yield return?
You would be crazy. I mean, if you didn't know what you're doing, yeah. So I think you really have to understand that, there's been some laggards and some leaders, right? So the tourist, those countries that rely on tourist revenues like Rep and Costa Rica, I mean, they're getting hammered this month because they were lagging the move in oil, right? The move in oil is everything, right? We've talked about the negative convexity to oil prices as we go negative. I mean, it's just been unbelievable. So, I mean, what you're seeing is the ruble, the Colombian peso, I mean, the Mex peso even, I mean, they are just moving hand in hand with oil prices at these levels.
Argentinian peso, like today, folks, if you go South America, real finally gets a break. Argentinian peso doesn't. Turkish lira now, they're defending at 7. What is Argentina actually doing now with the published in the black market peso?
Yeah, no, the extraordinary extrapolation of the litmus paper of Argentina, Tom. I mean, I have no idea what's going on there. I mean, it's such an illiquid, off-the-cuff market.
That's why we love talking to you.
and it's being driven by, obviously, the formation of credit committees. And the fact of the matter is, the initial offer that came out here by the government of Argentina creditors just weren't going to accept that. And I think you're going to see a lot more of that. I mean, existing bondholders, the fear that I have is that as countries start to default, I mean, we're seeing it now in Lebanon, we're seeing it in Ecuador. It's just leaving bondholders with a really sour taste. They're not going to take these huge haircuts, and they're not going to be forced into it. But then again, the circumstances of the COVID mandate that they don't take that much of a hard line. It's really, really a challenge if you're an existing bondholder in some of these distressed issuers.
So, Damien, what does it mean when a country defaults? What happens there?
Oh, well, it can, a lot of different things happen. You have to sit down with your existing bondholders and you have to do one of two things, really. You have to either extend your maturities out, give them a bigger window with which to pay you back, or you have to take a principal haircut, which means you're not going to make as much principal back at maturity. And so, you lose money off the cuff.
Well, to this point, Well, to this point, on a bond at 100, folks, the research here is really, really good, which is the haircut is 18 to 21 cents in the dollar. And my reading, Damien, is an amateur, is in your world, we're not down to that haircut level yet. Is that all we're waiting for? Is further agony so we can structure deals where the research says we structure them?
Well, it's interesting, right? I mean, you're right. 20 cents is that number that guys look for in distressed DM. They're going to look for, they're going to look to buy bonds in the teens, right? But what I'm seeing, if you just look at, U.S. high yield, you've got energy issuers now trading at 10 cents on the dollar, like Chesapeake, Valaris, Denver, California Resources. I mean, with the redetermination process that's going on here and what's going on to that sector, it's spilling into EM, right? Because those levels for those liquid high yield energy issuers here are being felt amongst the whole of these distressed issuers across, in Gabon, Nigeria, Angola. I mean, you just need a frame of reference to understand that, the recovery rates are being pulled that much lower. I mean, if you just take back of the napkin implied default rate based on U.S. high yield, you're talking something like 12 to 14% this year. The historical average is 6, Tom, and it's going to go up from there. So, that's really what we're talking about. Now, as that spills over into EM, it's certainly going to be more contingent on near-term liquidity, and I think that's why you're seeing the IMF and everyone step up their game here with remittances coming off a cliff.
So, Damien, just when you take a look at your world of emerging markets, where are the areas that you're most concerned about that there could be some real dislocations?
Well, I think we've seen it pretty much across the board. I mean, we're really pulling the thread here. I mean, I think Turkey's really being held up by capital controls. Again, capital controls are bad, yes, but they can be good if they're, if your economy's falling out of bed and there's a run on your currency. And so I know that the Central Bank of Turkey is doing everything it can to defend this 7 handle in the dollar lira, but it's going to go through there. The market's going to push it through there, and they need to kind of find a clearing price somewhere above that. And the same goes for South Africa. South Africa's another one that really pops out to me. I mean, it just keeps plumbing to new lows. Right. And it seems there's some artificial things going on to keep it propped.
You mentioned Lebanon and Ecuador. We all have our experiences, and if I say, Damien, Thai baht. Well, that's the 90s and another time and place. Where's the next Thai baht? Where's the next challenge that we have in terms of countries where, the policy, the politics, and the finance all come together to be really an attention-getting crisis?
Well, I think Brazil certainly stands out. South Africa stands out. These are countries that, fundamentally there's some real challenges that both of them are facing now. Probably South Africa way more than Brazil, but Brazil's a much larger beast. And, if you just want to talk size, Thailand was a much larger part of the emerging markets back in 1990.
Yeah, well said.
So I think Brazil's probably more in that camp, just given the potential impact it can have on the broader asset class. But I think South Africa's a weaker hand right here, and I think the markets are kind of exposing.
Yeah. Paul, not that I would editorialize, but I totally agree with Mr. Sassower on the focus on Brazil. I think has just got to be the political soup combined with the finance and the sheer size of the country. That's where I'm focused. Totally.
Yeah, it's interesting. We had Lisa Bromwitz and I had Bill Rhodes on yesterday, former chairman of Citibank, who was so instrumental in the 80s and 90s with restructuring discussions with Latin America. He called out, Damien, Venezuela as just a real looming disaster with all the migration out of the country. Is Venezuela even in the EM discussion these days?
I guess we lost.
Okay.
We lost Damien Sassower. He had to go off and look at Brazil. Damien Sassower, always great to have him on as well. Let's do this. Let's go to the news right now in New York City. Here's Michael Barr.
Tom, Paul, thank you very much. 100 U.S. Department of Agriculture inspectors have tested positive for the coronavirus as the illness ravages the nation's meat processing plants. The spokesperson for the agency says the workers are part of the Food Safety and Inspection Service, which employs about 6,500 inspectors. The USDA is taking measures to supply masks to workers, though they currently may need to find them on their own. Both President Trump and his top infectious disease specialists say they disagree with the decisions of Georgia's governor, who is moving forward with plans to reopen shops in his state without meeting the criteria laid out by the White House. The president spoke at last night's briefing.
I told the governor of Georgia, Brian Kemp, that I disagree strongly with his decision to open certain facilities which are in violation of the Phase 1 guidelines for the incredible people of Georgia. They're incredible people.
Several damaging storms and tornadoes were reported in parts of Mississippi, Oklahoma, Louisiana, and Texas, killing at least 7. Kip Robbins' neighborhood was devastated when a tornado struck near Yappan Cove, Texas. After the storm passed, Robbins says he discovered a 77-year-old neighbor buried under her destroyed home.
Told her, to keep talking to me, and as I'm trying to dig around in what was left of her house, we were able to find her and get her out.
Robbins and other rescue workers were able to transport her to a waiting ambulance. Global news 24 hours a day, on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Michael Barr. This is Bloomberg. Tom, Paul?
Michael Barr, thanks so much. Paul Sweeney, I'm looking at a market up 220 Dow points, up 30 points SPX, and very importantly, Paul, the VIX. And I know guys like you are going to tell me, Tom, the VIX doesn't matter. Hey, that's what we use, Paul. Get over
that's
it.
What we do.
Round trip 39 after the agony 2 days ago of a 47-ish, and we're back to 39.67. So we've got some good stock market here, along with some interesting dynamics in foreign exchange. You really want to say thank you to Damien Sassower as well. Now we go to a daily update from this New York City, the mayor.
Our families, the people we love, keeping them safe, keeping them healthy. We all think about our own lives, dealing with this new reality, wishing it was over. We all think about breaking free and what it would feel like to start to go back to normal. That's what every single one of us has running through our mind all day long. That's what so many conversations about, so many questions are about. We want to get back to our lives. We want to be able to feel the things that we felt, were really part of our everyday lives. Maybe we took them for granted a little bit. Maybe we didn't recognize how wonderful they were. And when we get back to normal, that day not too far from now, I hope and I pray we're all going to appreciate the little things a whole lot more. But right now, the question is, how do we get there? And I don't think people fall into the trap of thinking it's going to be easy. I think New Yorkers are tough. New Yorkers are resilient. New Yorkers are streetwise. We do not underestimate our enemy. We understand this will be a tough fight. And I do speak about this virus as an enemy because I think it's important to think about the fact that it's a fight that we all are waging. It's a fight that we all have to participate in. And again, New Yorkers have been outstanding in taking up this fight, doing everything we can possibly do to beat back this disease. But I want to be very clear, this virus does not defeat itself. We have to defeat it. We have to keep doing the hard work. And I think it's important when you think about that you not see yourselves as sort of witnesses to history, if you will, or just somehow this whole thing catching you up in it. I want you to think of yourselves as people who have power, remarkable power, to fight back, to be able to bend not only the curve of this disease, but the future, to create a different reality.